Hey, good morning, everybody. You guys are cracking me up. Hope everybody's doing well. It's nice to see you guys this morning. Um, Forgive me as I get everything set up finally. Guys, what is it today? Today's Wednesday, January 3rd. Because of the holiday on Monday, one of the things that you're going to notice about news is that we do not have we do not have crude oil inventories today. Oops. Guys, give me just 1 second. I'm going to mute for a minute. It does not appear that my headphones are hooked up. I don't want to sound like I'm talking in a well. Hold on just 1 second for me, guys. I don't think they were connected yesterday. Jim Forbes got on me, told me that I sounded like I was talking from the bottom of a well. Awesome. Guys, if it ever sounds like that, just let me know. It means that for whatever reason my AirPods disconnected. So I just had to come through with it a little bit and reconnect. So, guys, good morning, and welcome. Is it 9 a.m. yet? It certainly is. I am excited to be here today, excited to talk to you guys about the same stuff we talk about all the time, really. Let's get brilliant through a little bit of repetition, a little bit of recognition. Let's keep building our experience because the ultimate goal is it's reachable, guys. It's an obtainable goal. It just takes a little bit to get there, not too terribly much, and we're going to get there together. First thing I do every morning, guys, and I'm going to do this with you today and tomorrow and for the rest of our lives, is I go and check news. When my charts are loading, sipping that first cup of coffee, um, reviewing yesterday's trades, I pull up forexfactory.com and I just want to see what's going on in the world. At 8:30 a.m. this morning, we did have FOMC member Barkin speaking. It was kind of a dud, didn't really affect the market at all. It was a medium impact. I knew that it had the potential to move something. So I was flat at that moment. Coming in at 10 a.m., we've got some high impact news, some ISM manufacturing, some JOLTS job openings, plus a little medium impact. Guys, this one is noteworthy. And it's not that I'm looking at the news saying, man, if the ISM manufacturing PMI is positive, I'm going to take a long position, or if it's negative, I'm going to take a short position. What I'm doing is I'm really just understanding that I'm not in control of the market, that I'm not the one that creates trends or momentum. And the people that do, they may be waiting for that. They may have a reaction to it. So by knowing when news is coming out, 10 a.m., we've got high impact, medium impact. Um, at 2 p.m., there's an FOMC meeting minutes. That's high impact. What it does, it allows me to go do something other than get in front of their emotional responses. I choose to not trade during news. I give it about 5 minutes before, and then I'll begin trading again when the market seems to be moving at a normal pace, something that I'm comfortable with. There is no magic number for how long it takes the market to settle down. FOMC may keep it jumping for hours. Something like ISM manufacturing may be a quick 3 minute spike. You just never know. But knowing when it happens definitely creates an advantage. And then all the good stuff comes from the education page with Nexgen. gone to great lengths to make sure that you guys don't miss out on any information, that everything is available to you. And there's two places I'm going to point out. The first one is a software user guide, and this is your NinjaTrader how-to. I know that we get a lot of people that are brand new to NinjaTrader, and NinjaTrader can be a little daunting in the beginning. You're like, oh my gosh, how do I scroll my charts? How do I do this? How do I do that? Guys, this is all your stuff. This will get you from opening, closing, scrolling charts, building strategies for stops and targets. It's really one-stop shopping how-to for NinjaTrader. Of course, I always encourage you guys, if you have a question about what's going on with NinjaTrader, give me a shout in the room. Most of it I can help you with. The things that I can't help you with, I'll find out who can. Um, and then the tutorial section here. This is where all the rules that I talk about are discussed. This is where the advantages come through. This is where additional trade information shows up from. If you get to the point to where you're working market flow and you have some questions about it, there's a lot about the bar structure here within the tutorial section. But for me and for us in this first hour, guys, I'm going to go to the glossary of common terms and I'm going to tell you exactly what our first hour is. It is high probability trade. And I do this for a reason, guys. This is very specific, and it's not to hold you back or to keep you from reaching the finish line on day two. But a high probability trade is defined when every indicator on each chart agrees for the rules for the trade. Your triggers are going to be the strongest. There's going to be nothing between you and your targets. And really, this is a trade, the way it's taught in this first hour. This is a trade that has the potential to win 70 to 80% of the time. This is a trade designed to create confidence through the memory of success, to really give you the opportunity to buckle in and to make profits and give you a plan that is capable of winning more than it's losing as a brand new trader. But the most important thing about the high probability trend trade is what it does for you as a trader. It turns you into a chart reader. And I'm going to copy paste this one into the room because really this is one of the greatest lessons that you'll ever get is 90% of your day is reading indicators. 90% of your day is waiting for advantages to come true. And then it's that 10% where it feels easy, where you're relaxed. It's that 10% where you're going to take a trade because the rules are met. And this high probability trend trade is designed to turn you into a chart reader, to have you recognizing three very simple advantages that are going to lend themselves to allowing you to read fluently where the market is likely to continue, and then using those continuation points for entry and where the market is likely to go. And as you develop a management plan, you're going to be able to hold for bigger, better moves based on a few indicators. And then finally, where the market is likely to stop. And these are what we call termination conditions. It's my humble opinion that termination conditions is one of the greatest lessons that you can get as a brand new user. And Nexgen users have the distinct advantage of knowing where the people that control the market, good morning, Luciano, are most likely to react. You always hear the old adage, buy low, sell high. Guys, you now know where high and low are. And then we'll use a few indicators to understand whether those areas are likely to hold or whether they're likely to break. And we'll also recognize the advantage that's created when one of those key areas holds. So those likely to stop areas are not only going to keep you from taking that last trade that may be doomed, but what they're really going to do is they're going to behave as an anchor. When the market reverses off of one of these key areas, and you'll be able to see it and recognize it, we're going to talk about it extensively today. That high probability trend trade that happens after that reversal, guys, that's the one that typically wins 70 to 80% of the time. And this is what we focus our first hour on, is just the rules involved, what it looks like, where to find them, um, and how to practice them is what we're looking at. So these are your rules for a high probability trend trade, guys. Notice that it's not a very long list. There's not a bunch of words. There's not 1,000 different indicators that are involved. It's strong triggers, none of those likely to stop areas. We call them termination conditions, and then finding an entry, that point where the market is most likely to continue. These three rules piece together to create a trade. They each create an advantage. Your first rule will give you the advantage of momentum, the advantage of a market that's likely to continue in the direction of the trend. Your second rule will dictate that you have a clear path, that there are none of those likely to stop areas between you and your target. And then finally, the entry area is just a little refinement process that gets you into the market where the market is most likely to continue. Simplicity is always my battle cry from where I'm sitting, guys. The easier you allow it to be, the quicker you're going to get to where you're going. These three rules happen on only two charts. And in this room, I hear very often, well, I've got four charts, I've got five charts, I've got 8 monitors, I've got 73 different markets running at the same time. That's great. You're going to get to a point to where that becomes easy. But until two charts and three rules is easy, guys, don't expand just yet. I know traders that watch 12 markets at once. I know traders that have a wall of screens in front of them, and they do very well because they understand the basics and they know exactly what they're looking for. And we're going to start focusing in on exactly what you guys can be looking for. We're going to use two charts to find those three rules. Going to keep it simple. Um, hey, good morning, Mike. Speaking of people that can look at a lot of markets at once, experience, guides, it yields dividends. It really does. Um, Happy New Year to you, man. I hope it's a good one. I heard you're in Texas now. Welcome to the motherland. Awesome. Let me know if you ever make your way through Dallas. That's where I landed. Guys, two charts coming together to give you the three rules. And we use this for a reason. The large chart is like a broad stroke of a brush, guys. The large chart is this slow moving, this is what the people in control want to make happen. Your large chart is going to define direction initially for the new user. Your large chart is going to define momentum, that first advantage that comes from rule number one. And your large chart is going to define the areas that we're paying attention to, whether it is to stop the market or whether it's reverse the market. But your areas are defined on a large chart. And you're going to be able to do this with the most current bar. And it's really pretty outstanding that it only takes 1 bar's worth of information to define direction, momentum, and areas. Remember, we're keeping it simple, we're keeping it focused. Once the large chart tells you that your first two rules are in place, that those advantages are there, you're going to bring it to a small chart. And this small chart is going to take 1 bar's worth of information and break it down into about 20 to 30 bars. And this is the refinement process of that broad stroke of a brush. And by using the small chart for entry, what it does is it allows you to reduce your risk. It allows you to maximize your profit potential. Hey, good morning, Lyle. Good to see you. And it's rule number three, your rule for entry takes place on a smaller, faster chart. So large chart is what the large crowd wants, guys. There's no reason to fight them. They got the money. They're pushing the market. Go with the flow, right? It's a lazy river at MGM. You've got a pina colada in your hand. When they say up and there's nothing in the way, up is typically your best bet. Your small crowd over here, the small chart, these guys love to fight what the big crowd says they want to have happen. And that's where we get these little retracements, these little fluctuations. You guys will take advantage of these and pinpoint right where they're most likely to happen. And that's that small chart refinement process. So we're going to do this for the first hour, guys. We're going to learn the trigger line and Fibonacci rules for when it's okay to trade. This particular picture is your step-by-step path to becoming a confident trader. ASAFP. Um, we're going to go over the rules, guys. We're going to talk about them visually. We're going to talk about what the advantages mean. I want you to begin to speak to yourself in terms of advantages every time you look at your chart, because what it does is it puts you in the right frame of mind to know whether or not you need to manage assertively or whether you can really kind of let that momentum ride. Um, you guys simulate, practice. Don't wait until you think you're perfect to get out there and start practicing, guys. Your simulator is like the batting cages. It's very much like the driving range. You're going to get out there and you're going to just keep taking reps, right? And then adjust a little bit. And then you're going to take some reps and you're going to adjust a little bit. And I'm going to be the coach that stands behind you while you do it. I need to see what you're doing so that we can correct things that need correcting, so that we can reinforce great lessons that you're already practicing, celebrate some victories. And you're going to do that by posting your trades in class. Every time you simulate, every time you take a trade, I want you to drop it in the room and let's have a discussion about it. Because what you'll find is as you grow with the software, you're going to begin to recognize things a lot faster. But until you get to that point, that feedback is really instrumental in keeping you focused on the best and helping you kind of steer away from some challenging situations. And we want you practicing the correct rules. The goal is long-term success, guys. And when you get lucky on simulator, when you just kind of go all willy-nilly, jump in, jump out, and you're so proud of your simulated money, it's not always the best recipe for long-term success. We are going to simplify heavily. We're going to focus on that high probability trend trade where each indicator agrees for the rules on the charts. And then I'm going to introduce you to what's called a medium probability trade. And this will probably be most of your trades as a trader. But this medium probability trade means that one of your advantages is gone. And when the advantage goes away, whether it is momentum, a clear path, or an entry area, the second you deviate from this recipe for a high probability trade, it goes into a medium probability scenario, which means that you're going to rely on your chart reading, what you learned from the high probability trend trade, to help you manage a little more assertively, to help you grab quicker profits, to understand when it's appropriate to exit, to get out of that situation. You're gonna use your spreadsheet, guys. Nexgen provided you a spreadsheet. It looks just like this. This is mine. And your first page is tracking. Every time you take a trade, I want you to create a trade journal so that you can go back to it. Their second page is John. Your second page is where you're going to develop your plan. As you begin to recognize these patterns and turn them into your trades, you can start to put pictures of everything that you do in here, really cementing what it's going to look like when you take a trade. And then here's the client's trades, guys. This is the third tab. This is just research for you guys. There's about 275 pictures of high probability trades and medium probability trades. And it's developing recognition of patterns. It's burning these images into your mind so that you can, in an instance notice, recognize what does momentum look like? What is a clear path? And what is that entry area? What's the best of the best? And what you're going to do is you're just going to keep taking these pictures, keep saving these pictures, studying these pictures until it becomes easy. Because the pictures that you look at when absolutely nothing is moving, thank you, John Novak, for the example, is going to make it so much easier for you to catch this in the moment, for you to be able to take this trade when the market is moving. And this is a beautiful visual of the trend trade that you guys are about to learn. Thank you for that, John Novak. So posting your trades in class becomes instrumental, and I'm going to give you a little how-to on this, guys. And if you need help taking pictures, let me know. I want you to be able to post in the room, but tell me why you did what you did. Tell me what you were looking at. Tell me what your thought process was. Ideally, it's the three rules, it's the three advantages, and that's the perfect thing to write on a chart. But until you're sure what those three rules are, until you have a definite plan, just tell me what's going on in your head. And what we'll do is we'll talk about it. There are no wrong answers. It may just simply be, Mark, everything was green and I noticed that momentum, so I jumped in and I made a couple $100. And I'll be like, that's an outstanding trade because the path was clear, the momentum was strong, and man, you're embracing advantages, but you're marching to the beat of your own drummer. Let's figure out how to turn this into a plan. Show me where you enter. A lot of times where people enter is maybe a little reliant on fear and hope. So I love to work with you guys to get you in at the best of the best spot. The goal is always to have the least amount of risk with the most amount of profit potential. Um, Sometimes we're just going to high five because you did it so well. Sometimes we're going to be able to refine that, work together again. And each time you post in the room, it is a private session for you. And then as you work on management, show me where you got out. Maybe it's early, maybe it's late, maybe you held on and hoped a little bit, or maybe you jumped ship before you really needed to. Again, it's you and I working together through each picture to refine the process to get you where you want to be. So use your ability to get feedback every day by posting pictures in class. Track your real-time performance in that spreadsheet, guys. On that trade journal page, you should be studying this each and every morning. A lot of people don't do this. It feels like work, and surprisingly, people don't care to work. as hard as they could. But every morning, if you take 5 minutes, pour a cup of coffee, charts are loading, look at what you did yesterday and just ask yourself some key questions. What worked? What didn't work? Right? What are the patterns that brought you success? What are the patterns that you're going to ignore, that you're going to avoid? What felt easy? Typically, what feels easy is having all those advantages. And what feels forced is when you knowingly break rules and you know that you're going outside of that statistical advantage, but you choose to do it anyway, you're going to find that your pulse goes up a little bit, that your palms get just a little bit sweatier. But if you do this brief historical study each morning, it's going to prepare you for the day. It is going to accelerate the learning. Guys, this is 100% factual. I'm telling you, I've watched it for years. And I've seen the path, and I've been on the path myself, and I have fudged the path very bad. So my goal is that you embrace it a little bit. Post a lot of pictures, ask a lot of questions. There is no limit to how many you can ask, to how many you can post. Monopolize my time in this room, because the reality is trading is an individual sport, and the more you ask, the more you're going to get, and you will get to where you want to be the more you participate in this room. So let's talk about trades. Let's talk about the high probability trend trade. This is your foundation, guys. This is the one that teaches you to read charts. Remember, the large chart leads the way. The large chart is defining direction, momentum, and areas. The large chart tells us when it's time to look for an entry. Um, and it all starts with strong triggers on the large chart. This is this is the basis for really the best advantage that you can have, guys. Um, and the only way to have strong triggers on a large chart, the only way that it can happen is if your triggers and your background are the same color. That's the only way that strong triggers exist, guys. So by trading with the color, by trading with the background color, you're going to be trading with the direction of the market, where the people in charge want it to go. If the background is green, they want it to go up. We should be looking for rules to be met for high probability trend trades long. And if the background is red, they want it to go down. We should be looking for rules to be met for high probability trend trade short. And let's show you just how easy this lesson can be. Guys, this is crude oil. Is it going up or down? So if you're brand new, help me out here. Let me know that this is the easiest lesson you're ever going to get. Crude oil going up or down, guys? Simple U or D. Anybody? It's going up, absolutely, Mike. And if you go with them, you just made your life easier. Let's see. That's the NASDAQ. Up or down? What do you think? Guys, you've removed the burden of 50% of the possibilities there. And then there is the S&P, and the S&P is going down. And it's pretty awesome because what it does is it keeps you focused on never fighting the trend, guys. The trend is your friend. And once you've found the color, well, let's make sure that we have strong triggers. And that is a pretty simple look, guys. There's two parts to the trigger lines. They're the small triggers. It's two lines. They're solid. They're a faster moving average. And then there are the large triggers, and it's those dash lines. And on your large chart, when the small triggers break away from and above the large triggers with a green background, smaller green, larger green, background's green, I love that. This space created between the two is the strong trigger look. When I have a strong trigger look, the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum, guys, that's our battle cry in here. Odds favorable momentum pushes a market in the direction of the trend. Odds favorable momentum can break those key Fibonacci areas and smash right through them. Odds favorable momentum is going to help cover a lot of the mistakes that new users make. Because when you've got this much force to the upside, the market is in fact likely to continue that direction. In the downtrend, when the background is red, smalls break below and away from the large triggers, right? It's that space that's created between the two that lets you know that the odds are favorable for the market to continue down. Odds favorable momentum is the most favorable look for selling Fibonacci resistance on that smaller, faster chart, or for buying Fibonacci support on that smaller, faster chart. You're going to see it on your large chart, on your slow chart. After the fact, you're going to see these tails or these wicks with odds favorable momentum Guys, that's the retracement on the small chart. That is your pullback to the point where the market is most likely to continue. You will be able to pinpoint exactly where that tail is most likely to happen. This will become your entry for the highest probability trend trade. So when you're scrolling back and you're looking at charts a little historically, you see odds favorable momentum, you see these tails, you'll start circling them, and it becomes a study tool to see if it was a rules met trade at the time of that advantage. So strong trigger lines, pretty simple, guys. And let's do this. We'll use the S&P real quick, and I'm going to take everything off of my S&P except for trigger lines. And I want you to see just the reactions and the looks. And we're going to do that, but I want to talk about the opposite of strong real quick. Weak, right? If strong trigger lines move things, if strong trigger lines break things, if strong trigger lines create an advantage, well, then weak trigger lines remove each and every one of those advantages, guys. And weak triggers means that your small triggers have worked back inside of the large triggers. That space is no longer present. You can see momentum accelerate, and you can see it decelerate all the way to the point to where it works back in, and those triggers become weak. When you have weak triggers, anything can happen up or down. It becomes kind of a crapshoot. And I'm going to tell you right now, weak triggers tend to precede reversals in the market. Weak triggers tend to create larger bounces, deeper retracements. And if you go back to the S&P here, you can see that that odds favorable momentum pushes the market down. Guys, there's one of those tails. And look how it continues right up to the point of weakened triggers where we get that little retracement, right? And then it continues down, but those weak triggers let you know that it might push a little bit the other direction. Odds favorable carries the market up. Let me get rid of that pink line. That was from a lesson yesterday. As they begin to slow down and weaken, guys, there's your reversal. Pretty outstanding, right? Odds favorable, down it goes. There's a tail, right, as you get into that weekend, and then there's your reversal. Odds favorable pushes, weekend precedes a reversal. Guys, this is without the benefit of Fibonacci. Is everybody okay with the look? There's really two things that you're looking for, and it's the most current bar. So if you look at the right side, and you just kind of go through, odds favorable, there's your tail. The market continues up, and it just keeps going. The small return, it's getting weaker. Now I have weakened triggers, and there's my reversal. The most current bar gives us this information. Guys, give me a Y in the room if you're okay, if you're with me on this one. Odds favorable creates a very distinct advantage, guys. It's capable of breaking areas. It will help you cover mistakes, getting areas retested. So I'm a huge fan of relying on that odds favorable momentum and avoiding that anything can happen look. But remember that 90% of your day is spent waiting for the advantages, guys. In this picture, this is our rule number one picture. And just working from left to right. From the left-hand side, guys, odds favorable, the gap between the two, and it pushes down. Weak triggers, there's a reversal. Odds favorable, there's a tail. You guys get long. Weak triggers, there's a reversal. Odds favorable, there's a tail. You guys get short. It really is pretty simple, but you got to wait for those advantages to be present. And then sometimes we get into, I'm going to show you this, the dreaded transition, where buyers and sellers fight, where colors don't agree. Maybe the trigger line colors don't agree. One is red, one is green. It's impossible to have the advantage of momentum when that happens. When the background is green, but the triggers are red, you can't have odds favorable momentum because everything doesn't line up. So the color coding makes it pretty easy to avoid this transition area where buyers and sellers are duking it out. They're fighting for supremacy. One of them will win eventually. The key is to not try to predict what the market will do. Don't hope and don't wish and don't want. Simply sit on your hands, be patient. Either the buyers or sellers are going to win. Somebody's going to come out on top, and they're going to give you that momentum. Hey, good morning, Ace. So a little bit of patience goes a long way, guys. And you'll see this, and I think crude oil was putting on an absolute clinic today, where the market goes up, the triggers weaken, you get that indecision, that transition phase, and then it becomes strong again and continues to push up, and then they weaken at a key area. You get that little transition, and then they break through and they weaken, and that precedes the reversal. Pretty cool, right? You can actually start to get to the point where you're like, I just don't want it. It's not my trade. I don't have momentum. And then it bounces, odds favorable, off it goes to the races again. And that's just a very basic lesson in momentum. And that's what rule number one does for you guys. That large chart defines the direction, it defines the momentum. And when it does, you're going to begin to make sure that there's not termination conditions, areas that may reverse the market, that may stop the market. Termination conditions, and we're going to go extensive on these today. I've got a pretty good lesson lined up. I want you to think of these lines. These lines on a chart, guys. Divergence highs, divergence lows, red resistance, blue support, yellow 1-to-1s. These are where decisions are made. These are where buyers buy. These are where sellers sell. These are areas where decisions have been made historically, and your software magically, not really magically, it's a lot of brilliance coming from my brother, they print. You know where low and high have the potential to be. This is where maybe the buyers are in control and they're going up and they had their profit target set right here at these yellow 1-to-1s. And you can see that because of the push against it. The sellers take over. Decisions are being made, guys, whether it's entering, whether it's exiting. So what you can do is you can take these key areas and you can determine whether or not they're likely to stop the market or whether or not they've broken. And it's a very, very simple recipe. And I'm going to go to the tops and bottoms section in your user guide. And we're going to go through the two options. So the first option, is when these key areas behave as a termination. And two things have to happen. The first thing is price. These dynamic Renko bars work their way down and they reach an area because areas are where decisions are made, right? So this blue fib is an area where decisions had the potential to be made. This blue fib is where decisions are being made. Maybe the sellers are taking profits. Maybe there's a buyer there with a couple thousand contracts trying to make it go the other way. The reality is we don't know. We don't know what it's going to be. So we can use this little recipe to keep us safe. When price reaches one of these key areas, if the triggers don't deviate, if price reaches support, triggers remain above, that is the recipe for a termination condition. And all you need to know is that there's no more short trades into this blue line. There are three potential options that are going to happen. This area is either going to break, this area is either going to reverse the market, or we're going to watch the market dance at this area for a little bit as they duke it out. And you get that transition phase. So price reaches an area, absolutely no triggers break through, you have a termination condition. Rule number two isn't met. There's absolutely no reason to continue looking for a trade because you don't have a clear path. The path becomes clear, and we'll go through it all. Price reaches support up here. The trigger lines remain above. No short trades. And you're just in that holding pattern. You're saying to yourself, I don't have the information I need to know that this market is likely to continue. When both the small triggers and the large triggers get south of support, you can see that it begins to behave as resistance. And when it begins to behave as resistance, when the small and large have made it through, that area is broken. Now the path is clear. It hasn't reached the next area, so the path remains clear. You'll also notice that when it's breaking, it's odds favorable momentum that breaks through that area. Those strong trigger lines are what smash through support all the way to make it into resistance. That odds favorable momentum continues. We haven't reached the key area, so the path is clear. And guys, there's that tail. That's where you guys are pinpointing your entry for the highest possibility trend trade that you can take. So two options, no triggers, no trade, both triggers, the path is clear. For the brand new user, this is the easiest way to do it. This is your foundation. This is keeping you focused on not trading into areas that may reverse the market. And I asked the question on this picture, what if you insisted on a clear path every trade? I think most of you would agree that it would increase your success rate dramatically. And again, let's go back to the live market to see some of these termination conditions and how they react. Trying to find a good starting point. So we'll go starting right at midnight. The market reaches Fibonacci resistance and all of the trigger lines remain below. Even with that odds favorable momentum, that begins the push down. The market comes down and it does retrace at about midnight, pulls right back to a key resistance, all the triggers remain below, and it pushes to support. Strong triggers break. From support, it pushes to resistance. Guys, you have fibs on both sides, and it gets caught in that area. It's doing a little dance. And from there, it pushes all the way down to these support one-to-ones. It does overrun it a little bit. Strong triggers push it back up. It gets caught in that transition phase. Support, divergence low, pushes the market up. And I want you to see what happens at the key areas. It reaches resistance, creates a bounce. It reaches resistance, creates a bounce. It turns kind of from nowhere, support, resistance, there's that battle. The sellers push it almost to the tick, support, and the triggers don't break. And guys, that's what started the run back up. And then weak triggers are in the middle of giving us a push. When you know where the market is likely to react, where you know where those decisions are being made, and guys, you do know, it keeps you from trading into those areas. Look at that, price reach resistance. And look at the push on your smaller chart that came through. It may break, but it was enough to create a fight. It was enough to put you in a position that was untradeable. Resistance pushes down, support pushes up, and right in between resistance and support, this is where it's easiest to make money with odds favorable momentum in one of those tails, guys. So termination conditions are going to keep you from taking trades into areas that are potentially problematic. Termination conditions are also going to behave as the anchor for the highest probability trend trade that you can take. Because when a termination condition creates a reversal in the market, that's going to be a strong top. When a no triggers through termination creates a reversal in the market, that's the precursor for the highest probability trend trades you can take. So here's some pictures of termination conditions at a high, guys. And the recipe never changes. Price reaches the area. If the triggers remain below that high resistance, that divergence high, those yellow one-to-ones, just sit on your hands and do nothing. Wait for the reaction. It's either going to reverse, it's going to fight, or it's going to break. You don't have to know because you have this great gauge to keep you from taking that ill-fated trade. Termination conditions at a low, the recipe never changes. Price reaches the area, guys. That's the most important thing. And when price reaches the area, if the triggers remain above, don't take that trade. Sit on your hands, do nothing, whether you're going up or whether you're going down. Embrace that recipe. Price reaches, what are the triggers? Is everybody good with that basic concept? It either is or is not broken. You either have a clear path or you do not. That's your high probability scenario, guys. That's the one that's teaching you to read your charts. The picture in the middle, this is your first medium probability trade. This is a trade where a problem exists. When odds favorable momentum smashes your small triggers through an area, and I mean smashes, not peeks its head up over, but really has some giddy up going through it, but the large triggers remain below, what this lets me know is that 6980, this area of resistance, it has the potential to break because of the momentum. But since the large triggers aren't above, it's not a clear path. And if it's not a clear path, we are outside the realm of high probability. We are now into medium probability, where an issue exists. Your issue has been identified through your chart reading, and it's that 6980 hasn't broken yet, which means that these trades are managed a little more assertively. If we're giving up the clear path, we're not going to forfeit momentum. We're going to make sure that it is coming from one of those key areas, one of those tops or bottoms that created a reversal, and you're going to make sure that your entry area is perfect, guys. This is going to be your first medium probability trade. I'm going to give you a checklist to take it in the most effective manner. But these are your three scenarios on termination conditions. It's either broken, or it's not, or it has the potential. And then you will trade accordingly. Going to go through the section a little bit more. I want you to see a couple things. Divergence low. It's a loss of momentum that stems from a pivot, guys. When momentum doesn't follow price, creates a pivot, you're going to see the cyan line from a low. It just lets you know that the buyers stole momentum from the sellers. That's all it is. It's not a termination condition. It's a line in the sand. And when price comes back and hits that divergence low, if all of the triggers remain above, well, then it becomes a termination condition. And if that termination condition, no triggers through, reverses the market, well, now I have a strong bottom, and this is the precursor for the highest probability trend trade I can take. See how the trigger lines break through fibs. They start to deviate. That's not a clean termination, but that divergence low is picture perfect. This is what we call a pivot stop out, and off it goes. Becomes even more powerful when it lines up with fibs, guys. Price reaches resistance. None of the triggers break. You guys say, hey, no long trades. I'm going to wait and see how the market reacts. And the market reacts all the way down to support. The trigger lines remain a mile above. Absolutely no short trades, guys. You don't have a clear path. The reaction is a push back to resistance. They're fighting. Buyers and sellers are fighting right in between two key areas. When price comes back to resistance, it reaches two levels of resistance along with a divergence high. None of the triggers are capable of breaking. And look at the difference in your triggers. Look at the difference in the color of the background when you retest that area. When this termination condition creates that full reversal, look at what happens. Your smalls are already below the large. That's momentum. You haven't reached that area of support that created a bounce last time. That's a clear path. And there's one of those tails. There's one of those little potential pullbacks. Guys, this is your 10%. All of this is your 90. That's that highest probability trend trade that you can take after a termination creates a full reversal, guys. That's your 70 to 80% winner. And it takes a little bit of patience to wait for it. My favorite picture to share with you guys. Guys, I spend the most time on termination conditions because this is the most broken rule out there. We get antsy, we want to take trades, and a lot of times people are willing to forego that clear path just to be busy. And I want you to see how it happens again. Price reaches those yellow one-to-ones. Strong triggers broke support. But when it reached the one-to-ones, there was nothing for you to do. The small and the large, even with all that momentum, well, they stayed above the area. So you guys said, all right, I'm not going short. I'm going to wait for the reaction. And look at the reaction, guys. The buyers fight, but all the triggers remain below resistance. The sellers fight back, but the trigger lines don't match. The colors aren't there. And the fight continues. And the amazing thing is you guys don't get caught in the middle of this. You guys are sitting on the sidelines saying, this is part of my 90%. I don't have momentum. I don't have a clear path. Let me sit on my hands until that happens. And that little bit of patience, that 30 minutes while they fight, leads you to odds favorable momentum, to having a clear path. And there's your tail, guys. That's your 10%. That's the highest probability trend trade that you can take. We're going to talk about this entry. But it's doing nothing when there's nothing to do, not taking a trade when there isn't a statistical advantage. You'll be amazed at what this does for your bottom line. Because if you give away $500 hoping and wishing, you're just break even when you finally catch where the advantages are present. So, termination conditions, guys. Is everybody feeling pretty good about that? These are large chart terminations using areas. Letting the large chart define the areas. Letting the large chart define where problems can happen, where reversals may happen, where fights may happen, where decisions are being made. Can you guys give me a why in the room if you're with me? Being patient. Just waiting. Resistance stops it cold. Support stops it. Back into resistance, and now it has the potential to break. It has good momentum. The smalls are through, but I've also sacrificed momentum over here. I'm giving up momentum twice, and sure enough, there it goes, pushing right beyond. It's going to make a down bar, not a tail, it looks like. I don't know, but I'm not willing to give away two of my three advantages. So we have momentum and we have a clear path on the large chart. I'm going to talk to you about one termination condition on a small chart. This is going to allow you to see change that the large chart slower, um, movement isn't going to show you. Um, Sometimes you have a clear path and the market goes up even though everything's set down. And sometimes you've got a clear path and odds favorable momentum and that market seems to reverse from nowhere. On a large chart, it doesn't make sense that it goes down from here. But this final termination condition, you can use your smaller, faster chart, that refinement chart. And it's going to help you see change a little bit quicker. And we're going to use divergence, that loss of momentum. When the market forms a pivot, and momentum simply doesn't follow price. Three divergences in the same price range may terminate the trend. And that means that three cyan lines from a low or three magenta lines from a high on that smaller, faster chart. Guys, this could stop the market. This can reverse the market. This can create a deeper push that makes it untradeable. This is a termination condition. This is rule number two not being met. These three divergences become even more powerful when your small triggers work their way inside of the large triggers. You get those anything can happen triggers. So we're taking that great lesson from momentum, from rule number one, and we're applying it on the smaller, faster chart. We're seeing that slow down a little bit faster with our trigger line location. And then it becomes even more powerful when that third pivot from a low is higher than the previous. A lot of you guys will recognize this as a head and shoulders pattern, or that third pivot is lower than the high, lower than the previous from a high. Again, that head and shoulders pattern just adds a little fuel to the fire here. I'm not a patterns guy. I just like to use the words third one's higher, third one's lower. It keeps it simple for me. But you're going to see this look at a low, and you're going to see that look at a high when the large chart can't show you the change. When the large chart may have odds favorable momentum, but it wants to go the other way, those three divergences will nestle themselves inside on that smaller, faster chart and help you avoid that final long. You'll also be able to use these three divergences. Maybe you're in the perfect short trade and everything is going great, but you see three divergences print. It gives you a management opportunity. Right now, we're only discussing entries, but eventually you'll be able to use these divergences to get you out of trades when maybe things have begun to change. The large chart's not showing it yet. So you take the perfect short right at the top of that tail, and everything's looking beautiful. And then you get three divergences and weak triggers, and you're like, you know what? Let me make some money and sit on my hands and wait for the next great trade. And you take it, and you make a little money, and then that third divergence prints, and you get out break even on your second contract, and the market ends up going down. So it's also going to become a management tool as you work your way into those higher or those medium probability trades. So guys, that's termination conditions. That is giving yourself a clear path. Large chart so far has defined direction. Large chart has defined momentum. Large chart has defined the areas. We 100% know exactly what the large crowd wants to have happen. We know that they want it to go up. We know that there's nothing in their way to create a bounce. So now we're going to refine, guys. Now we're going to take that one bar from the large chart and we're going to break it down into 15 to 30 bars. And let me show you what that looks like. If I put a square around one bar, the lead bar on the large chart, with odds favorable momentum below all the fibs, right? That square shows up. The bottom of the bar is that little beginning of the fight, that pullback by the smaller, faster crowd. The top of the bar, that tail, that wick, is bouncing right off of an area for continuation with the momentum. We're going to pinpoint on the smaller chart exactly where that tail is likely to happen, and we're going to do it with rule number three. And rule number three says that you're going to be able to use a limit order. You're literally going to be able to wait for the market to come to you. And you're going to have that limit order waiting at an area. And the key is that area, it's going to be fibs Mid bands, yellow 1-to-1s. Remember, large chart areas define problems. Small chart areas are going to define entries. But we want those areas to be inside of what we call favorable large triggers. And favorable large triggers simply means that your large triggers, those dashed lines on from the smaller, faster chart, and the synthetic triggers, same dashed lines, but they have little steps on them. These are the large triggers from the large chart. When these two work together, when they are wide in the angled in the direction of the trend, and most importantly, when they are overlapping one on top of the other, like two snakes riding piggyback, the tighter these two triggers are on top of one another, the smaller your window of opportunity, that point where the market is most likely to continue is. Because you guys will be entering from the areas within fibs, mid bands, or yellow 1-to-1s. So the tighter the triggers, the more favorable the large triggers, the least amount of risk you're going to have on that trade. So the process is pretty simple. And it does take practice, but I'm not only going to show you the process, but we're also going to talk about how to study it. So large chart says up. Large chart says a clear path. Large chart says that there's absolutely nothing in the way, and it's time for the Nexgen user to look for an entry. Your small chart's going to look like this. It's going to be going with the large. You're probably going to have odds favorable momentum, and you're going to look for those favorable large triggers. You're going to turn your attention to the large triggers, the large and the synthetic. They should be wide. They should be angled in the direction of the trend. And they're very much like a shark about to breach here, guys. They are moving averages. So as that large chart moves up, so do these trigger lines. And then you're going to look, where are fibs? Where are mid bands? Where are yellow 1-to-1s? You've got a couple of them right here. Yellow 1-to-1s, two fibs, a mid band, favorable large triggers coming up like a shark. You've made the decision. It's time to look for an entry, but I have to wait for the small crowd to do their thing. I have to wait for those yahoos to fight the large crowd so that they can get me back to my perfect spot. And that fight begins with a reversal bar. When everything says up, you're going to wait for a down bar. When everything says down, you're going to wait for an up bar. And when you see it, I want you to draw a box from the top of your triggers to the bottom of your triggers. And then inside of that box, let me go to this one. We're going to look for the areas that have fallen within that range on the triggers. So large chart is green. Large chart has odds favorable momentum. Large chart has absolutely nothing in the way. Small chart finally gives us a reversal bar. The small crowd fights. This is the process. Identify from the top of the triggers to the bottom of the triggers. This is not where the market is likely to continue. This is just where we're looking for areas. And then inside of those triggers, from your highest point of support, closest to price, to your lowest point of support, furthest from price. The gold box represents where the market is most likely to continue, guys. This is where your advantage comes. These areas inside of favorable large triggers embrace that language. They create a bounce point. They're like a brick wall, and you're throwing a tennis ball. And your job is to put a limit order. Literally wait for the market to come to you right at the top of that window, maybe even a tick or two above, because the large chart has overwhelming momentum, because the large chart has absolutely nothing in the way. We're not expecting the deeper push. We're expecting it to bounce off the highest point, and we're not willing to miss it because the advantages are in place. So if the market comes back and hits that top area, hits your limit order, you're in a trade with momentum. You're in a trade with a clear path, and you're in a trade coming from the point where the market is most likely to continue. If we've created a window, you have to be okay if the market starts pushing into that window. It's okay. It's normal. The advantages are still present. Even if it goes all the way to the bottom of the window and you find yourself, man, I'm down $100 at the moment, but I'm still where the market is most likely to continue. And one of the biggest advantages of what we do here at Nexgen is if you know where it's likely to continue, well, then you know where it shouldn't go. It shouldn't go 4 or 5 ticks beyond that window of opportunity. That's not where the market should bounce. So you're going to wait for it with a protective stop. And if the market extends beyond that window 4 or 5 ticks, guys, you're going to get stopped out. And here it is. Get ready to gasp with me. you're going to lose the trade. You will lose money, but you know what? Anything that wins 70 to 80% of the time, it's mathematically obligated to lose 20 to 30% of the time. So you're going to develop trust in the methodology. You're going to study this methodology. You're going to backtest this methodology. You're going to practice this methodology. And what you're going to realize is that these three rules that happen on only two charts create a statistical advantage. And if you take 10 of these trades, you're going to be okay losing two or three. And if you take 100 of these trades, you're going to realize that 20 or 30 of them aren't going to find the mark. But what you really want to do is you want to develop that faith. You want to get so comfortable with this look and understanding that it wins more than it loses that you never miss the entry. Because 70 to 80% of the time, guys, this is your result. Profit target reached. Great entries create manageable trades. Great entries reduce risk. Because you waited for the pullback, you've got an even further distance to get to that target. Because you waited for the pullback, you minimized your risk. And once it begins to go in the direction of your trade, you're going to reduce it even more below that reversal bar, above a reversal bar for a short. Guys, 20 days focused on high probability trend trades is going to create an advantage where you can get into the market under the best of the best conditions. And let's see, where was that one? I'm going to do this real quick, guys. You know what? Let's go to NASDAQ's a little kooky sometimes. I'm not going to lie. There's a little bit of overrun. But let's use this for an example, guys. This is the S&P. This is odds favorable momentum. That's about 5 in the morning. Does everybody see how I circled the tail? This isn't the live market. This is after the fact. If I scroll back to it, do you see how it pulls right back to resistance inside of favorable large triggers? Do you guys want to do a little bar by bar? Do you want to do an entry together so that you can see how to practice this? It begins, this is your study tool. Can you guys hear me? Odds favorable, clear path. Guys, this is what it looks like on your large chart when it's happening. That most current bar, right? So let's go through it. The background is red. I'm going to talk through exactly what I do when I'm looking for a trade. I look at my large chart and I say, hey, that background is red. I wonder if I have odds favorable momentum. My small triggers are below the large triggers. They're both wide. They're angled in the direction of the trend. Absolutely, without hesitation, rule number one is met. Price hasn't reached a key Fibonacci area. I don't have fibs. I don't have one-to-ones. I don't have divergence lows. So guys, give me a Y in the room if you see it. I have not only odds favorable momentum, but my path is clear. Now it's time for me to look for an entry. So I turn my attention to the smaller, faster chart. And on the smaller, faster chart, I also have odds favorable momentum. My large and my synthetic are coming down. They're coming down with strength, right? And I have a mid band here, and I have some one-to-ones, but I need the small crowd to do their thing, guys. I need that small crowd to say, hey, we're going to push back, Mark. And the reversal bar prints. So at the time of the reversal bar, let's blow this up a little bit. At the time of the reversal bar, I'm going to look from the lowest point of my triggers to the highest point of my triggers. This is not where the market is most likely to continue, ladies and gentlemen. This is where I am looking for my areas inside of favorable large triggers. So my lowest point of resistance happens to be a mid-band right there. My highest point of resistance happens to be yellow one-to-ones right there. Look at how tiny that box is, guys. Look at how small that area is. Your job, actually, you know what? Give me a Y. Does everybody see? It wasn't the triggers. It was the areas inside of the triggers. This is where the market is most likely to bounce. I'm going to put a limit order just below that window of opportunity. I'm going to drop it just a little bit lower than that lowest point of resistance. Because that moving average, that mid band, it's coming down while this market's coming up. So let's see what happens. The market's coming up and I'm getting excited and I can't wait. And oh my gosh, life is so good. And it's coming and it's closer and it's closer. And son of a gun, they're going without me. And one of the things that I see a lot in this room, guys, is people getting in on that low point. Oh my gosh, it didn't hit my entry. What am I going to do? I better jump in at 75.50. What we're doing is we're developing trust, guys, and I want you to see something, and this is a great example of it. The market pushes down a little bit, and you're thinking, darn it, and then it gives you another reversal bar. The rules are still met. It's only two divergences, so it's not a termination condition. Let me drop down. See how the mid-band came down? My window of opportunity off of this reversal bar extends from the mid-band to the one-to-ones. It got a little bit bigger. I'm still going to have a limit order just below it because my large chart leads the way and it says down and it says strength. And the market comes up and it smacks right into my order. This is where the market is most likely to continue at 78.50. About 3 or 4 ticks above, I'm going to put a protective stop because if the market smashes through here, I don't want to be in that trade anymore. Is everybody good? This is our entry. We are in the market. Yellow line is our limit order. Congratulations, you're in a short position with every advantage, guys. And another up bar, and the nerves hit and the palms get sweaty, right? And another up bar, and look at that. It faked you out. It tried to push down, and you guys got excited, and then it went back up, and half of you jumped ship, and you said, oh my gosh, it's not going, this sucks. But you're still in the window. And it goes up, and it goes up, and it goes up. Right off the top of the window, guys. There's your reversal bar. Your stop kept you safe, and because of the reversal bar, you just reduce risk. You've got 8 ticks. It's about $200 worth of risk on 2 contracts. And all that momentum straight to Fibonacci support, guys. And that's a 6-point move. The key concepts. Oh, let's see where that circle ended up. Whoops. I just butchered it. Not quite. We didn't pinpoint it exactly, did we? It did go over a little bit, but it stayed inside that window of opportunity. Guys, this is your highest probability trend trade. This is what you're going to focus on for your first 20 days, is getting into the market at the right spot. So you can go back and circle those tails, and you can start taking pictures for your plan. When I have the momentum, when the path is clear, when everything looks great, guys, I'm going to circle a tail. And I'm not trading the tails, I'm trading pullbacks to support inside of favorable large triggers. This is how you're going to study, guys. I want you to go back. At the end of every day, I want you to go circle these, see if you missed something, see if you took something that didn't fit the rules. But what we're doing here is we're creating recognition through repetition. We're studying this kind of without the market moving, so that when the market is moving, we can make a decision. And what do you think about this? Price reached Fibonacci resistance. Absolutely none of the triggers broke. That looks like a perfect entry, doesn't it? Look at that area of support inside of favorable large triggers. And it even lets you think that you got away with one. But rule number 2 said don't take that long trade. And sure enough, rule number 2 kept you out of a loser. Guys, the trades that are perfect are awesome. These trades that break rules and you see the loser, these are the ones that are going to set you up for success because you're starting to learn the patterns that are going to rob you of that success. But it comes with taking entries first, guys. You got to get into the market when the rules are met. So I've got, for you guys, a trend trade checklist. Are there any questions about the high probability trend trade? It's only 3 rules, guys. Don't make it more. It's only 2 charts. Don't make it more. Embrace the idea that if the market is coming from a good top or bottom, from a termination that creates a full reversal, it creates an advantage because the decisions have been made at a key area, and the decisions were to reverse the market and push it the next direction with strength. If you have odds favorable momentum, if you have none of those likely to stop areas, no terminations, and then it gives you an area, notice that it's in bold, inside of favorable large triggers on that smaller, faster chart. Mark yes to each and every one of these guys. That's your entry for the highest probability trend trade. This is your focus. And you know what, Andy? It is easy for me because I've been doing this for a while. Because if you look at my spreadsheet, I've got 275 pictures of the trades. And if you look at my Snagit and I open up the editor and go to the library, I'm just under 7,900, guys. Repetition creates recognition. Repetition gives you just cat-like reflexes. But you can get repetition and kind of check yourself with this trend trade and make sure that you're focusing on the best of the best. Make sure that you're taking the best entries. Make sure that you're giving yourself an opportunity to win more than you lose, guys, because that confidence comes from the memory of success. I've never had anybody mark yes on each and every one of these. And I'm telling you, everybody says they want to make money. This one requires patience, but I've never had anyone do worse than 70%. And I've had people back test this to up to 90% winners. And it's never happened. Nobody's ever followed it to the letter and shown me worse than 70% winners. So there's something to think about, right? Maybe this is a great plan for the new user while you learn to read your charts. It requires a great level of patience, but what it does is it gives you the opportunity to win more than you lose, to start getting confident straight from the get-go. I'm also going to give you the exact same checklist, but I've added pictures from the resource material. What is a great termination condition that reverses the market? Well, it's when price reaches and none of the triggers break, and it goes the other way, right? That's the best of the best. That's a precursor for the highest probability trend trade. Here's your odds favorable momentum going both directions. That's right, guys. You can make it whether it's going up or down. And there's a little reminder of what it means when they weaken, guys. Why forfeit that advantage? Is there really a good reason? No triggers through, sit on your hands and do nothing. Both triggers through, go, go, go. One trigger through, smashing through with odds favorable, I'm going to give you a plan to find that trade. And then, guys, here's the window of opportunity. Great entries create manageable trades. Great entries reduce risk. Great entries give you the best chance of success. Here it is at the short. Reversal bar, top of the triggers, bottom of the triggers, cyan shaded areas where the market's most likely to continue. And it reminds you that the areas outside of the trigger lines are not a part of that window of opportunity. Just because they're lines doesn't make them entries. We want our lines to be inside a favorable large trigger. So guys, the second checklist, put it on your computer and study it for 5 minutes in the morning. Make sure you understand what it is that you're looking for. Print this one out, put it on your desktop. Make sure you understand what you're looking for. And for you guys that are new, don't feel like you have to know it all on day one. Take a day, get good at picking direction. Scroll back 10 days on a large chart and just say it's going up, it's going down. I'm going up, I'm going down, right? Remind yourself that it creates an advantage. And then do the same thing. Scroll back. Strong triggers, weak triggers. Strong triggers, weak triggers. Commit it to memory. Get the words associated with the rules, with the pictures. Get them embedded into your brain. And then start working on your termination conditions. Go back. We did it together, right? Price reaches resistance. Absolutely no trigger lines break. Not one of you took that long trade because you're so darn smart. Not one of you went short into support, nor did you go long into resistance. You stayed out of the transition, waited for the areas to break, and maybe looked for your short down there. And guys, this is kind of what you're going to do. Scroll back. Take pictures. That's a bad top, right? That's not a termination condition. Then odds favorable momentum, everything down, potential to break, and sure enough it did. So you find these opportunities based on repetition. It slows the market down the more pictures that you take. Fill up that spreadsheet, guys, over and over. What are your favorite looks? This is my perfect long. Odds favorable, clear path, pull back to support inside of favorable large triggers. This is a great long. Not the best momentum, but not totally weakened. Clear path, area inside of favorable large triggers creates an opportunity there. And guys, these are from you guys in the class. High probability trend trade short. Odds favorable, coming from a termination. Window of opportunity defined. Guys, this is your pre-trade. Absolutely beautiful. So what you're doing is you're creating this recognition over and over so that you can get into the market in the right spot. Well, and then you kind of have to have a plan. You need to be able to do the same thing every time you pull the trigger, because every time your rules are met, you have a statistical advantage, guys. This is the key. I've had some of the traders that I respect the most, some of the traders that I've seen have the most success. Everyone has told me the exact same thing. You have to know the looks, what you're looking for. You have to know what it's going to take to get you into the market, and you have to you have to have a plan that you're not willing to break. The most successful traders I know have two options every time they take a trade. Either the rules are met and they take the trade, or the rules are not met and they choose not to take the trade. The hardest thing you'll ever do is absolutely nothing when there's nothing to do. But this plan that I'm giving you right now, guys, this is designed to optimize your chances of success on that high probability trend trade, on that 50-50 trade, that area with the potential to break. This is not the end of the road for you. But what this does is it keeps you focused on the best case scenario. And I'm going to tell you right now, and I hope that those of you that are striving for consistency, maybe you've been with me for a while, but you're having challenges. Um, I've had people follow this to the letter, follow this KISS plan, this keep it simple plan to the letter, and fund accounts with Apex or Top Step or any of those prop firms literally pass the test and fund accounts within their first 30 days with Nexgen by keeping it simple. I have found that the further from simplicity you deviate, the harder it becomes to be consistent. So this is going to optimize your chances of success, guys. Excuse me. Simulation, study, class feedback, continuous practice. You will create a plan that's tailored to your needs. You'll create a plan that suits what you're looking for. And chances are it's going to be because you recognize momentum, a clear path, and you might create your own entry area. And you'll see that in this room a lot. Not every trade presented in the room is a high probability trend trade. I want you to fight the desire to worry about what the other people are doing and focus on your task, focus on your path. Because everybody's at a different level. If John Novak posts a trade in here, you have to remember that he's 25 years ahead of you. I'm 4 years ahead of you. E. Webster might be a year ahead of you, and you might be 3 months ahead of somebody else. Everybody's at a different place. But your plan's going to come together on your ability to read the indicators, and that's what this high probability trend trade does for you, is it teaches you to recognize advantages. And the simple plan for consistency starts with, don't fight the large chart direction or triggers, guys. Don't put yourself in that position to go against the large crowd like that. This will eliminate about 60% of the new user mistakes. Define your entry. Take 20 days and 100 pictures to define your entry. Scroll back, circle tails, take pictures, annotate charts. Write the rules on the chart. Get your entries down, because entries create manageable trades. And then once you've gotten to where you're good recognizing the advantages and you can find that place where the market is most likely to continue, you're going to have to manage it. It's the second piece of the puzzle, guys. Great entries create manageable trades. Well, how do I manage the trade as I'm learning to read the charts? Well, when you get good at reading the charts, you're going to change your plan. Until you get to that point, I'm giving you the most mechanical, opinionless, pragmatic approach to management that you'll ever see. But it stems on your ability to get into the market where it's most likely to continue, getting in at the areas inside of favorable large triggers. And when you do, your stop goes where the market shouldn't. I'm in at the best spot. My stop is where it shouldn't go. Yesterday, guys, and actually probably every day for the last 5 years, I see people placing stops right about here. But Mark, that was 12 ticks right inside the window of opportunity. And what happens is this guy gets hit a lot because the market fluctuates, right? So your initial stop goes where the market shouldn't, outside of the window of opportunity. And at this point, you're either going to get stopped out for a small manageable loss, guys, and that's a normal part of a positive equity curve, or the market is going to bless you with a reversal bar in the direction of all that momentum and the direction of that clear path. And it's using that bounce point, that ricochet spot, to start going with momentum, with direction. When this happens, you're going to move your stop. You're going to put it a tick or two above that reversal bar. And you're going to say to yourself, it's out of my hands. I've reduced my risk. I've managed my risk. Life is good. The advantages are in place and it's doing what it's supposed to do. I'm either going to take a small loser on this one and I'm going to be okay with it because my execution was so great, or the market's going to hit your first target. And we're putting it only at $100. Trading two contracts, $100 is the first target. And guys, when you have a freight train, an absolute loaded down semi Mack truck doing 100 miles an hour down the highway to the downside, it's hard to hit the brakes, which means that $100 spot's pretty easy to hit when you follow the rules. And you're going to take profits and you're going to feel good and your confidence is going to grow and your palms are going to dry up and your heart rate's going to go down and you're going to move your stop to break even. So not only did you get paid and you're as happy as you can be, but now you have zero risk on the trade. And I'm going to tell you guys, break even is it's a little sketchy. It's not the best stop, but as you learn to read your charts, you'll learn to change your management plan. But what this does for you is it allows you to celebrate the victory. It allows you to have zero risk, and it reminds you that the large chart is why you're in this trade anyway. And it makes it easier for you to sit on your hands and see if it makes it to the second target. And the second target's only $200 away, which means that if you follow the rules, you take the trade, you hit both targets, that's $300 in your account, guys. That is a $300 trade, typically over the course of 30 or 40 seconds, maybe 2 minutes. And that $300 trade, if that's the best you can do every day, even if it's three $100 trades, well, that's a $1,500 week, guys. By the end of your second week, you have qualified for your Apex fund. By the end of your fourth week, by the end of the month, you're up 6 grand. And now you can start taking payouts in that. And by the end of the year, you're looking at about 72,000, and that's on a 2 lot. And if you incorporate that exact same management and let the profits compound, turn it into a 4 lot, turn it into 144,000, right? Base hits pay bills. Thank you, Ron. You don't have to hit a home run every trade to be successful. $500 a day on a 2 lot, $250 per contract a day is $126,000 a year, guys. So we're learning how to get in at the absolute best spot. We're learning how to manage it without emotion, very pragmatic. And this is your plan in the beginning. And I'm going to show you something kind of cool. If I get rid of all of the educational fluff, your beginning plan is the third of a piece of paper. That's it. It's a third of a piece of paper. It's small, it's simple, it's concise, and it's very, very clear. And it offers the opportunity for feedback over and over. The bottom half of the KISS plan is that 50-50 trade, that area not broken trade. And it gives you the highest chance of success, guys. And this is the most lost trade between new users. You still have to have momentum. And that's key, and I talk about that every day. Momentum should be the one that you never give up. Remember that the area is not broken, which means that you don't have a clear path, right? You've given up the second advantage, which means that on your KISS plan, you will absolutely refuse to forego momentum or the perfect entry area. So you're going to have strong triggers on your small chart. This is mandatory. No divergence on the small chart. This is mandatory. This is important. And make sure that it's coming from a good top or bottom. Make sure that it was a decision at a key area that pushed it in the direction of your trade. Guys, this is one of the biggest things to helping success on these 50-50, these potential to break areas. And then use the same entry rules. Get in at the area. Notice that it reminds you before you ever get to management. This is the second time it says divergence, no trade. That loss of momentum kills 50-50 trades, guys. And then your management plan, because you know that it's not a clear path, it has to change. You have to manage more assertively. Your initial stop is still where the market shouldn't go. You're still going to use the reversal bar. And look at this, number 3, if divergence prints, exit the trade. Hopefully nobody in this room has any misconceptions about what divergence can do to a 50-50. You're going to take $100 on the first contract or at the first trouble spot, meaning the area that's not broken, meaning a problem on the chart. Sometimes it might be $80, $60, $40. You have to determine whether or not that risk is worth it for you. And then 200 on the second. These are base hits, guys. This KISS plan is designed to optimize your chances of success. This KISS plan is designed to get you focused on the best of the best as you learn to read your indicators. You will grow outside of it, I promise. And what's cool is I get to watch you grow outside of it. And every time that you present a chart, every time you talk about something, every time you show me what you're doing, it creates the opportunity for you to grow a little more. And you're going to grow a little bit every day. And then I wrote this the other day, and I want to share it with the classroom. And I'm going to drop this in the room too. But guys, the key is having a foundation. The key is building a strong base to grow from. And then understand the basics and grow a little bit each week. So for you new guys, just so you know why I keep it so simple in the beginning, I blanket with very conservative rules. Recognition of advantages and a solid plan, the KISS plan, that optimizes your chances of success as you learn to read your charts, as you learn to read your indicators. So for the new users, all terminations are bad, right? So for the new user, not having momentum is bad. Areas beyond the large triggers for entries are bad, right? You're staying focused on the best of the best. Blanket rules because it increases the likelihood of success, but they're not always bad. But until you have the experience to know when to use exceptions, it's safer for you. You have a better chance of winning more than you lose if you focus on simplicity and all those advantages. And then just like anything, the more time you spend with it, the more you're going to see. This opens doors for you. But one of the biggest challenges that new users have is when they see older, more experienced users taking trades that don't fit the rules, they instantly become the trade police and it creates confusion. Well, how come they can trade in determination conditions? Or why didn't they have momentum? They're breaking rules. Mark, get them. Guys, that's not my job. My job is to talk about advantages. My job is to help you cultivate a plan that suits your needs. And the short answer is why they do it is because they have the repetitions and the recognition to be able to gauge whether or not that trade typically wins more than it loses. So then we grow. And now that you get a little time, a few months under your belt, you see these patterns that repeat themselves. Suddenly you're trading in determination conditions because the momentum is overwhelming and there's no loss of it. And it's a very low risk entry, right? And you start changing your plan based on your abilities. So question everything, guys. Ask a million questions. Post them in the room. Really, really, really demand my time because as long as you're in this room, it's your time. And give yourself a little grace. That's my wife's favorite phrase. Give yourself some grace. You're brand new. It's okay to be brand new. It's okay to not have those repetitions. Don't be in a hurry to be at the finish line, guys. This is a marathon, not a sprint. A little bit every day goes a long way. So that's my first hour. It's a little bit longer than it normally was, guys. I want to make sure that you guys get it. And here's the other great example. Even with the reversal, the momentum, and everything, not one pullback. Every dollar in the market isn't yours. People love to ask me, Mark, where was the entry? Well, there wasn't one. There was no entry. My rules weren't met. So I just have to watch it go. And I have to wait. But now I've got that termination. I've got the full reversal. I've got odds favorable. Everything is pushing down. My triggers are looking good, right? I know you did, Ron. And watch this. I don't even need a picture for it, but Ron got in right about here, right around 59, I think, and probably out at 54 and change, if I had to guess. because Ron has a plan that uses odds favorable momentum. Oh, I was off, huh? 62 to 59. That uses a clear path, but doesn't use a pullback to areas inside of favorable large triggers. And if you don't have the experience Ron has, you're going to get run over on this trade. You're going to make mistakes on this trade. You're going to lose more than you win, and you are going to get frustrated because you're trying to be somebody that's a year ahead of you. So be you. We like you. You're an important thing. All right, guys, that's my first hour. Second hour revolves around looking at your charts, answering your questions, talking about things. I've got a great lesson on good tops and bottoms that I want to share with you guys. E. Webster was nice enough to post a picture that was amazing to go with it. But I'm going to stretch my legs for a second. I encourage you to do the same. It's important to not sit and stare at charts forever, especially if there's nothing happening, guys. Stand up, stretch, do something. Um, and when I come back in a few minutes, we will rock it out. We'll look at your pictures. We'll watch the live market. We'll talk about advantages. But I really want you guys to set the pace for the rest of the classroom. You tell me what we're going to talk about. See you guys in 5. All right, guys, here we go. Second hour getting in. Joel said talk about high probability trend trades from the reversal bar to the window to the trade monitor, stop movement, and target. Perfect, Joel. Be glad to. So let's do this. And let's just go through it one more time, guys. And this is in the spreadsheet that I gave you guys. In the top left of the client, um, Joel, this is everything that you could ever need from it. Rules met on the large chart, guys. I can't stress that enough. It's always rules met on the large chart. If the rules are not met on the large chart, you're forfeiting a lot of advantages. So when the large chart says go, wait for the reversal bar. That's it. Signals a pullback. This looks just like the one that we looked at in the S&P today. When that happens, you're going to do a couple of things. You're going to look for those favorable large triggers from the bottom of the triggers to the top of the triggers, right? Trades come from areas. I want you to start writing this down. High probability trend trades come from areas inside of favorable large triggers. So the trigger location is just showing us where to look for areas. You'll be able to refine dramatically from the lowest point of resistance to the highest point of resistance. And guys, I'm going to drop my spreadsheet in the room. This is on the third tab, top left. Create that window, guys. Once that window is built from the lowest point of resistance to the highest point of resistance, activate a limit order and pray. That's it. That's all you can do. It's either going to show up, hit it, or it won't. And if it does, you're in a trade. You're in the highest probability trend trade ever. And then guys, on that same spreadsheet, that same page, go to management. If you are in at the area inside of favorable large triggers, stop goes where the market shouldn't. Reversal bar prints, tighten up risk. First target hit, go break even. Second target hit, get out of the trade. So the idea is recognition, right? Guys, this spreadsheet has the entry sequence over and over. It also has all of these trades, right? All of these trades from other clients, odds favorable, everything cranking up, pull back to support. And he asked, is this a buy? Well, we talked about advantages. Absolutely it was. The rules were met. So Joel, it's just repetition going through, start to finish. But you got to do it more than once, guys. You got to do it over and over. If you don't have a spreadsheet with 100 pictures, you're probably not as good as you're going to get, right? If you don't have a spreadsheet with 500 pictures, you're probably not as good as you're going to get. So the idea is that you just keep doing it. You just keep doing it until it becomes easy. And then when it becomes easy, that's a good time to add. But let it be easy first, guys. Let it be simple first. Let it be basic. Let it be mechanical instead of emotional. Learn to do one thing, one easy thing that wins more than it loses well first, and then add another trade. And now we're going to go through it. I'm going to take a picture of the simple plan for the 50-50 because we're going to take a look at our first picture today came from E. Webster. Are you with me, E? And this is a couple good looks, guys, and I want you to see it. Price comes from down here, right? And it's looking good, and I can't see where that one came from. But it looks like it's hard to tell. Was there a fib there? I see that is support now. It looks like we're coming through resistance, maybe broken. On this short, and the market pushes and it goes right through, right? And right here, E, I see momentum. I see a clear path. I see everything great on this one. And the perfect entry, and it just didn't work. That's part of your 30%. You're absolutely right. That's the one where you've just got to say, next. And what it did is it started a fight in crude oil in between areas is what happened there. So this one doesn't work out. And then the market pushes up and you get one of those 50-50 looks, right? Not a good bottom because it's not coming from a no triggers through termination. Does that make sense? Because that's the precursor. Can I make this smaller? Okay. So let's capture it and let's take a look. And we'll go to this one right here, perfect, without a doubt. But now let's go to the checklist for this one. Odds favorable momentum is an absolute, without a doubt. And I think that you do a great job of catching that. Smalls outside of the large, absolutely. It's wonderful. And then you get a no on the divergence from the 5-1. So we know that there's a problem. The first problem is that two areas aren't broken, a divergence high as well as resistance. And now I have a loss of momentum right at that key area as well. So I'm kind of leaning towards giving up two advantages. And for me, this is the tiebreaker. So initially, if this is a no, it's no trade. You don't even look for it. But what I find is that when the market is coming from a good top or bottom, when it's coming from a termination that creates that full reversal, sometimes I'm willing to fudge that one divergence because a decision was made at the bottom that said we are reversing the market right at a key point. Um, but because that didn't happen, because that's a no as well, this very simple plan keeps you from this trade, right? And this is one of those things where you're like, well, it was a good one, but it's not a good bottom. It looked good. The entry area looked good, but I'm really giving up two of the key factors that make a 50-50 a good trade. And then the hardest thing you'll ever do is be okay if it decides to keep up, right? So, and then we have the same thing here. Not a no triggers through termination. You had odds favorable, but not a clear path. And if I'm not mistaken, divergence printed on that bottom one as well, right? So the checklist is the same on both, and I think that this is one of those we get excited to be in trades. We see that momentum and we're like, man, momentum breaks things. I know momentum breaks things. It's more apt to break it if you're coming from a good top or bottom. Does that make sense? And that's one of the reasons why in the KISS plan, um, and it's a royal pain in the ass for you guys that like to stay busy, is the KISS plan optimizes your chances of success, right? So for me, E. Webster, I think the natural progression is if there is a good top or bottom, then that divergence, one divergence doesn't scare me so much. Or if it's not from a good top or bottom, I'm going to definitely insist on no divergence, right? But I'm not going to give up both of these on a 50-50. And for you guys that are 50-50 traders that are frustrated with them, give me a why in the room if that makes sense. You've got the checklist for the absolute best of the best. But if I'm saying to myself, I'm not giving up, I'm not going to just not take them, don't give up both of them. It rarely works out. It really does. It rarely works out. So thank you for posting that. And that's going to kind of take us into. I took a lot of pictures in crude oil this morning. So I got the question that was asking about good tops and bad tops. And the question was, when does a good top turn, or when does a bad top turn into a good top? A bad top never turns into a good top. You can still create a great look, but a bad top can never turn into a good top, guys. A weak top can never turn into a strong top because the recipe for a strong top or bottom, and guys, this is, um, E's picture is a great kind of precursor to this. And we're going to have the strong top and bottom talk. Um, when price reaches an area, decisions are made. And it's important that you understand this. When price reaches an area, decisions are made. And the decision may be that the buyers take profits, which makes it easier for the sellers to push. Or the decision may be that there's a seller with deeper pockets that wants it to go down. But you guys have the amazing advantage of knowing where these decision points are. And I can't stress enough what an advantage that creates for you. And the longer I spend with the software, the more I'm just floored by it. But when a decision is made, at a key area that reverses the market, that's a strong top. That's a strong bottom. And the idea is that it's an awesome top or bottom until the next top or bottom, until the next pivot, until the next termination condition. So this picture, this bad top that's not coming from an area will never be a good top, ever. Can't happen. The pivot is done, it's gone, it's over, it's in the rearview mirror. And then it pushes all the way down to support. And when you get to support, absolutely none of the triggers break through. And the question is, well, now is it a good top? Everything's down and the triggers are below. Is it a good top now? Well, it's not a good top because it's not a termination that creates a reversal. What it is it's odds favorable momentum. And it is a downtrend, right? So you still have those advantages. They're not coming from a termination that creates a reversal. And then I had the same picture here. This is a different market, different day. Bad top, same look, right? Pushes all the way down to support, can't make it through. And this is kind of the second half of it. Price reacts to support and comes right back to resistance with every trigger line below it. This isn't a good top because it doesn't create a reversal, but this is an outstanding look that says resistance is likely to hold. And because it's likely to hold, I still have to get through the problem. But this is the key area, guys. This is where the decisions were made by the sellers to finally give it another shot. But you can see the fights that happen in between. You can see how decisions are being made. So going back, I took pictures of crude oil. There's a bad top on crude oil, and the buyers may not be done yet. That's what we're saying, is the buyers are pushing up and everything's going up and they want it to go up and they cleared the areas. And they're probably not done yet, but some of them might have taken profits. Some sellers may have entered the market, and they push down. And look how it pushes down directly into support. And then the buyers fight back up, and the sellers fight back down, and the buyers fight back up. But the sellers are never able to get through that key area, not from that bad top. And ultimately, what happens is the buyers take back over. They're like, all right, we're done messing with you. But I think we wanted to get to the fib. Does that make sense to everybody? Since no decision, no key area where a decision is made happened here, there's the potential that they may push up higher. You still have to follow rules. But bad tops don't make me feel good about the opportunity for this one to continue down. And then it gets to the area, and look at the momentum. We said strong triggers break things. Strong triggers maybe create a retest. So we're not doing longs into the area, three divergences in the same price range, but it's way too soon for shorts. So this is just a termination. It's not a good top. And look at the bounce that comes back, but you can see the reaction off the key fib area. You can see that decisions are being made. And the decision was that the buyers still want to go up. So if you tried the short, if you tried the long, you lost probably 2 or 3 times. If you tried the short, you got your butt kicked because you can't fight triggers, right? And it's not coincidental that the fluctuations happen in between fibs. It's not a coincidence that you see this right at key areas. And then they break it and everything goes up, and then now they hit that key area again, and it's just a termination. It's a no triggers through termination, but once again, it's not a strong top. Guys, is everybody following me so far? What we're really seeing here, this was crude oil this morning, is we're just seeing the decision making in the areas where it happens. And I think that if you speak to yourself, these are where decisions happen. I don't want to be in the middle of that decision. It's amazing how much you stay out of, how many times you stay out of the way. So this is a termination, not a strong top because it's not a reversal. Look at the fight. It kills any longs, but it's too soon for shorts. Let it be easy, guys. There's nothing to do here. And with all that, they come in and they retest, and we don't know who's going to win. Were the buyers trying to get '05 instead of '02 and maybe they give it up? Are the sellers going to take over? Hell, I never know. Well, the buyers said we're going. And it broke once again, guys. And I'm telling you, If you choose to do nothing when there's nothing to do, it keeps you from forming opinions about areas. It keeps you from hoping and wishing and wanting. And then eventually we get that bad top again, all the way down to support. Some of you took a 50-50 right in that little dance zone. And if I remember right, that's where it finally pushed down. That's where the sellers gave it a big enough push right to that Fibonacci support where the buyers continued their move up. So that was today's little lesson. Um, it was kind of a quick one, but all that to be said, that decisions are made at fibs, guys. There's that bad bottom, and we see it again. This is the S&P, not a termination that creates a full reversal, and it goes straight to resistance. And the sellers push, and the buyers push back, right? Two fights by the buyers, two losses of momentum by the buyers. But the sellers have a line in the sand. They're saying, no, we wanted that fib. So we're going to unload. And sure enough, they get their fib. And the bad bottom precedes it, right? And a good bottom, a termination that creates a full reversal, takes it right up to that next decision-making point. So I hope that was helpful. I hope that gives you guys a little bit. If nothing else, think of termination conditions at places where decisions are made. And this is why I don't trade at them, because this guy's making the decisions, guys. This is the large crowd. This is the deep pockets. This is the investors that I'm not willing to fight, guys. It's a giant shark with sharp teeth. I don't have to be first. I don't have to be in at the lines. I don't have to be the first one in the trend. I don't have to be the last one out. The reality is this guy creates a wave that's very easy to ride. This guy establishes direction and momentum, and this guy establishes all the advantages that I need to look for a trade. And when he provides it, I'm going to be the remora. I'm going to be the guy that really just kind of waits. Do all the work, and then I'll take a couple $100 at a time. Um, and my brother told me once, he goes, "You're calling us bottom feeders. We're not bottom feeders. We're taking advantage. We're taking advantage of the opportunities created by the people that can create opportunities." And you've got a very solid methodology that gives you the ability to do that, and it's pretty cool. So let's go to the next picture. Um, Let me see where we're at real quick. That was ease. Scrolling down, scrolling down, scrolling down. Here's one from the creator himself, John Novak. Odds favorable. Everything says down. He takes a pullback to resistance inside of favorable large triggers, and sure enough, all that momentum carries it down. Textbook. Pretty outstanding. And then Cav. Termination creates a full reversal. Full reversal gives odds favorable. You take a little hiccup in the market for a momentum style trade, and you get paid down to the one-to-ones. And the only thing that I can say about this one, Cav, and I know that you have a plan, but for my newer users, this is a momentum style look. This uses the momentum on the large chart, the momentum on the small chart. Um, when your other triggers are still up, getting through, breaking and pulling back tends to be a little more advantageous rather than trading directly into the fib. But that termination that creates the full reversal made this trade okay for Cav. It's a great chart read. He says, because I have a no triggers through reversal, decisions were made right at a key area that absolutely slaughtered the momentum to the downside. Cav has developed a way to take advantage of it. And Cav, you did it beautifully. And that's just kind of how you build plans, guys. All right, Ace J. So let's see what we have. Going short from a long. So you're looking to sell the market. Small triggers are up, large triggers are up, everything is above support. Does three diversion, so Ace J, are you with me in here? And this is a pretty good lesson. So large chart leads the way, right? All of my triggers are above resistance. So does that support long or short? What do you think? If everything is above this area, doesn't that suggest that longs at least have a better shot? And then if price reached support and all of my triggers are above a second level of support, doesn't that, just by the rules of termination, say maybe it's too soon for a short? Do you see how I'm kind of going through this on the large chart? And three divergences does have the potential to reverse the market. There's absolutely no doubt about that. But instead of speaking in absolutes, say potential, right? It has the potential, but just because three divergence on a small chart has the potential, there's a very real chance that all it did was give you a push down to this area of support that's more likely to hold than break. Does that make sense, Ace? So what you have to do is you kind of have to just be a little patient and wait and see what happens, right? Is support going to hold, or are all of these triggers above the area going to continue it up? And it's okay to do nothing here. It's okay to sit on your hands. But I think that the biggest thing here is this market may go down. If it's really going to go down, these triggers are going to roll. They're going to get back below the areas. You're going to get odds favorable momentum. This is very much the idea of hoping to be first versus your indicators telling you that it's time to go. I actually have a picture, and I like to share this one because I am my worst enemy on trying to be first. It's a true story. The difference between thinking an area is going to hold and when it actually holds, letting the trigger lines dictate, Ace, it's almost always the same price. Almost always, because when there's fights at the areas, you see it fluctuate. But the difference between everything up and everything down, it's the same price, but without getting stopped out 6 or 7 times. I'll drop that one in the room. I hope that makes sense. So if I look at yours, if these triggers are going to roll, there's a good chance that it's going to come back and retest somewhere right up here after the roll. But you may get that fight, that bouncing. Is that yesterday at the end of the market? Or is that, yeah? And that was crude oil, right? Can we go look at it and see what happened after? Just for grins. I like to do this. I don't know if you guys ever do this. I love to see what happens at the end of the day. So was this it right here? No worries, and I'm sure that you have a plan. Was this it right? That wasn't it right there, though. That doesn't look the same. That's all right. Oh, that's because it's the S&P and not crude oil. Totally different market. And it was this one. And this is fun for me, guys. And I think that this is a tool that's really valuable. Is you get the opportunity to see a few things. 14, 14, 14, 47.90. So it came from up here. No, am I missing it? So it was literally right at the end of the night. And there's your great example, Jay. Remember when I say that it's typically almost the exact same area, but when the triggers roll, it becomes easy? How cool is that? That isn't scripted, ladies and gentlemen. If it's really overrun, if those three divergences are really going to do it, you had an order right here, and then look at where a little bit of patience gets you. Well, a lot of patience. Right back to it with everything down. And then it's effortless. Then you don't have to worry about anything. And this is one of those cool things about patterns, right? That our desire to be in the trade. And Ace, I think that you were onto something with those three divergences. Um, and just a little bit of patience. It's rare that they just run. It really is. But that is the exact same freaking price. So it's nice when I can pull a picture from 2 years ago and it lines up with what happened yesterday afternoon. Same look. Love it. Great picture, Ace. Thank you. And I hope that works. And guys, when you get good at reading your charts, um, you're going to begin to predict a little bit. You're going to begin to recognize these things that can change the market, that can reverse it, that can push it the other direction. And then it's going to be your ability to sit on your hands and let it happen pays dividends. And then Ron, bad bottom, bad bottom. When it finally reverses and everything agrees, he takes that little momentum style snippet. Nice job, Ron. Consistency. If you look at Ron's trades, they all look the same, guys. And he'll tell you that he goes 3, 4 hours in between trades. Bad bottom, 50-50, divergence from one-to-ones. And then David W., you said, I'm not taking this one. David, nice job. And then, and guys, I'll tell you what, I love to celebrate victories. And David, this is a huge victory, right? Because look at that momentum. You wanted that trade. I know you wanted that trade. I just want to do the window of opportunity thing real quick. From the top of the triggers to the bottom of the triggers, from the highest point of support to the lowest point of support. Your window is 7 points on the NASDAQ. It is literally 140 per contract, hoping that it breaks from a bad bottom. I think you made an awesome decision, man. Great job. All right, Haji. Let's see what we did. So you took the best entry. No, I'm glad you did. Good enough bottom. That's a kick-ass bottom, Haji. Pardon my French. That is a pivot stop out at support with every trigger way the hell above from a bad top. That's all the momentum in the world. It's a perfect pullback, and nothing says that market is slowing down. And you got your targets, and then when you hit resistance and it rolls here, oh, you didn't get your entry. Or did you just line these up to show me where you would have gotten in? So you would have hit your targets, absolutely no worries, huh? That's the one, Haji. Great job. I mean, but it's perfect, right? Termination, odds favorable, pull back to support inside of favorable large triggers, get paid with the momentum. Beautiful. And Cav, I think I missed one of yours. Man, Cav killing this one. Everything says down, but you let it twist. Odds favorable. Everything says up. Momentum style once again. Easy money. Easy money. Nice job, Cav. Great looking trade. I took one that looked kind of like it this morning. almost the same thing. That's not it. Maybe I didn't. I don't know where it went. Very similar. Guys, this is a momentum style trade, and then Cav, you let it break through and pull back, and I think that creates a little bit of an advantage there too. Nice job. You guys are getting good at this stuff. New users, remember, you can ask questions about everybody's charts. It doesn't have to be yours. And then we have Mike Lynch. That termination creates the reversal. The reversal gives you odds favorable. The odds favorable pulls you back to resistance inside of favorable large triggers, and you just kept making money. Shorted 4 more on the pullback. So you got in momentum style. Is that right, Mike? When it started to break, you hopped in momentum style, and because all the rules were met, you said, well, shoot, I'm just going to add on and get paid until the momentum stops. Mike, go swing some golf clubs, brother. Your day is done. And how long did you have to wait for it to be perfect? How long did you have to wait for that termination to smash through with momentum? That's awesome. Great trading, dude. And then to add on, guys, we talk a lot about people exiting trades when the rules are still meant to go in the direction of the trend. And Mike, you killed it. Those should be trading goals for everybody, to be able to recognize it in the moment. John Novak, area breaks, resistance behaves as support, the momentum is great, no divergence, pull back to support inside of favorable large triggers. Your timestamps are a little bit off, I think. Beautiful entry, right to the fib. Is that 1580, John? You didn't start trading until 10, and you're up 1600 on a 4 lot? That's awesome. One more good trade and you're done. And then Cav, same trade. Everything says down. Got out of the trade and got right back into it and made it back. Nice job, Cav. Same trade. And then your momentum was good. Termination. You went short against the triggers. Didn't work out. You tried the long into the term. Didn't work out. You took the first short. Fought those small triggers. And then you went short and made it down. And Cav, that's that lesson that I talk about a lot. I don't know. Ace, you would have to talk to John about that. And then for you NASDAQ traders, remembering that the 13.2 is the small chart instead of the 5.1, that's that great example, guys. And I talk about it in the spreadsheet, and I give you guys a little insight on it. Cav, do you see how those smalls acted as support? And then the close on the other side made it easy? Yeah. I watched that a lot. I like your entry. If you got in at the one-to-ones, that's beautiful. And it gave you the opportunity to manage when they couldn't get through. But smalls of support once, twice, and then when it gets to the other side, it's Moneyville. Nice trading, Cav. Oh, that was John. Sorry. That was John fighting a little bit. Cav, I'm sorry. I'm giving you that. And then odds favorable, 50-50, good bottom, no divergence, beautiful entry, didn't work. David, all day long, man. All day long. It just didn't work. They just had to dance a little bit. Did you find an opportunity on this side when everything rolled? Because sometimes they push lower. Was there one? Let's go to crude and look. Let's see if we can talk continuation trades. I was like, wow, they're kind of caught. So not the best. I feel like an area of support inside of favorable large triggers with odds favorable momentum and a clear path. We'll see what happens. And then I'm going to read about it too. So MIT means market if touched versus limit orders. When you trade multiple accounts with a copier, some of your limits may not be filled, leaving you without knowing you have unfilled orders. So it's for the trade copier, John. When it's market touched, they all go now regardless of price filled. So no leftover orders if you're not yet using copier on multiple accounts. It's not really needed. Awesome. Thanks, John. And don't let your finger slip when moving a stop. Man, I have done that. And nerves of steel. It's a perfect entry. It's the exact same one David took, right? And it overran. That is nerves of steel. But the large chart said everything was going up. I mean, you were in the good. And then have you ever done that where you think that you're moving your stop, but you forget to click a second time and then you click above and it's like crap, pulls you out of the trade? Those are usually the ones that run for like 18 days in the same direction. I've done that one. Great looking trade. Nice hold. Large chart led the way. And then John, when new, this is your temptation. When it goes down, you say, I shoulda, but no, you shouldn't. There you go. That's a good one, Ace J. It's like he was looking at your chart earlier, right? That's that same look here, isn't it? But the large chart just didn't give it yet. And it went down, John. Let's see what it looked like when it went down. What time was it? Oh, it's live? It's going down right now? I didn't have a fib there. Yeah, you got the new fibs. That's okay. But this is kind of cool, right? There's your three divergences. Hey, what do you think, Ace? You want to see if they retest now that everything agrees? They don't have to, right? But look at that. It hit a mid band and the large triggers are a full bar away. This is kind of cool, guys. And when you start recognizing patterns like this, um, it really does help foster patience. And John, after 2 weeks of trading the new charts, you're super, super happy that everyone will love the upgrade. Just finishing up a couple tiny things and everyone can have the upgrade. Without a doubt, guys, I've been watching them. I've been on Skype with them every day looking at it. It's clean. I'm excited. I don't even have it yet. So, Ace J, how are you with the gap theory? But see how they're still above? Full bar away, bouncing off the mid band. I think it's so much easier than trying to go short and getting stopped out and trying to go short and getting stopped out and trying to go short and getting stopped out. Just that little bit of patience. That little bit of patience pays huge dividends. It always does. Always does. So just open and go. I like that. That's going to be nice, right? And then, of course, Ace J, when it doesn't do it, you're like, oh, I should have. I should have gone short. I should have done this. All right, David W. Bad bottom. Resistance. Smalls are through. Large are not. No. There's your window. But if we go through it, it's a bad bottom, right? It's not a termination that created a full reversal. The small triggers are peeking their head through. Large triggers haven't made it. There's only one area inside of those triggers. We'll see what happens. Is no divergence enough to take a chop? Some people will wait for a reversal bar right at the area, and they'll say something like, you know what? I'll at least get my risk established before I just go for it. And there's not a right or a wrong way to do it. You guys will come up with a plan that suits you, um, and you'll figure out what works best for you. What do you want to talk about, ladies and gentlemen? We can come back to this one and see what it is. You guys lead the way. Not a good top. Hits the mid band. Pulls back. How cool is that? This is pretty similar. Starts to weaken, divergence, scrambles, and now we're just waiting to see what happens. Yeah, Mike, let's talk about it. Let's just open up a chart. Um, and we'll talk about it. We'll look for a couple different examples too. Um, John says it takes a long time to figure out what works best for you. You have to figure out, try a bunch of different things, not with real money. Amen. Until you get Nexgen's trades to fit your personality. The true story. You will get better with Nexgen every year for the first 10 years. I am. I still get better every day. And you can make money if you do it right, but you're still going to get better. All right, Mike, let's talk about gap theory. I'm going to do gap theory first, um, with nothing on the chart but trigger lines. Because the basic idea on gap theory, guys, is that your trigger lines are moving averages. And when price accelerates away from a moving average rapidly, it tends to close the gap. So that's just normal. That's the same phenomenon that gets us into trades, why we wait for a pullback to an area inside of favorable large triggers, because the market likes to correct. So Mike, that's the first thought of it. And then John is giving me my second picture, the exact same look. Price comes down, reaches that mid band. When it hits an area and the large triggers don't follow, price is likely to close the gap. So what it does is it lets me know that this mid band in the moment is acting as a termination condition, that this is an area where I'm not going to take that short. And check this out, because isn't that the circle that we drew, Ace? So Mike, we drew this circle, right? And of course I missed it by 15 minutes, but price reaches the area, and because the large triggers were a full bar away, and you can use that reversal bar to gauge it, came right back to it. I used to think my brother was some sort of voodoo guy. But he said, don't go short yet, Mark. Don't take that short because you're right into a midband and the large triggers are a full bar away. And we're not using this to go long. Does that make sense? We're not fighting momentum. We're not fighting triggers. We're not fighting everything and saying, well, it hit the midband and the large triggers are a full bar away. I better go long to get that snapback. We're just saying, don't take this short, right? We hit the midband. Don't do the short yet. It's just too soon. And then they come back and they retest resistance, right? And they're right back into the midband and it comes right back to resistance. And it's decision making time, guys. Because of the bad top, no decisions were made at a key area. Remember, we talked about this earlier. And because the buyers didn't reach their number, The sellers can give it a push, but they're going to fight. And they're going to fight right in this area. So one of two things are going to happen. Either resistance is going to hold and the market's going to continue down, or the buyers are going to finish their business and go up to that next key area. And the reality is there's indecision in the triggers, right? I don't have a clear path. My rules keep me out of the chop. My rules keep me from looking for that trade into support or into resistance. All I have to do is let the people in charge make a move. Does that make sense, everybody? So I can use the gap theory to say no more shorts. And then Mom always said, when in doubt, don't. John and I very much said do twice. So here it is kind of in picture, and John put it up there. If price pulls away from those triggers too fast, too far, hits an area, it's likely to snap back. Fibs or midband. And Mike, that's what makes, that gap theory is what makes the midband a termination condition when those large triggers remain a full bar away. And then what I was looking at is without anything on there, you'll get to the point, and this is pretty cool. You're welcome. And this is still for everybody. Price pulls away, closes the gap, right? Price pulls away, closes the gap. You guys will get to the point through pattern recognition where you'll say, you know what? I bet you there was Fibonacci support in a midband right there. And I bet you there was a midband and probably some fibs right there, because you're going to see that gap theory, and it has nothing to do with price and it has nothing to do with areas. But if you come back after you see that gap theory and you drop some indicators on it, you're going to be like, man, I'm so freaking smart. There was support right there. It was the gap theory. It did hit an area. And all you're doing is you're just kind of reinforcing those great rules. And you're reinforcing that pattern recognition. And guys, that's what pays dividends. Bad top, hits the midband, closes the gap right at resistance. The sellers want to keep going. There was no reason to be first. Bad top, hits support, pulls back to resistance. So far, sellers are taking over. Isn't that cool? That's the same pattern on a different market. And then there it is in reverse. And then there was that 50-50 with no divergence, but not in the area. And now there is a divergence. David, how do you feel about it? You've got split triggers, divergence, bad bottom, and a big honking window of opportunity. Some of you may like this one, some of you may not. And Mike, you're welcome. Guys, pattern recognition is one of the most important things that you can do. Just going through, who cares? Even if it's not a trade, take a picture, annotate the chart, start burning it into your brain what those patterns mean to you as a trader. In the spreadsheet, there's a whole section with pattern recognition. It starts with, let's see what's on this one, because there's no pictures. Everybody's in a holding. Split triggers. The difference between the absolute best look and when they start to flail a little bit because they're moving averages creates a huge window of opportunity, creates problems for the average trend trader. When you start using a market flow chart, when you get that bad top, divergence, having an HVA line on an 8-range chart, when you add that, helps you identify where a lower divergence. And then John says, and I agree, when you have that split trigger look, waiting for a reversal bar at the further area, it's okay to get a little confirmation. Here's the gap theory again. Midband is a termination. And guys, this was a great one from the classroom, right? Everyone's like, oh, look, 50-50, everything says yay. And the gap theory is huge, and it runs it right over. All of these are on the spreadsheet. Losing momentum, deeper push. Losing momentum, deeper push. Patterns that you can recognize to give you an advantage. This one just says great chart reading. Ah, it's a dead link. Midband is a termination again. And there it is, perfect, right? Gap theory once again, all the way to the midband, even from a good bottom saying, hey, I'm not going long yet. And then E. Webster, it reacts off the midband, it closes the gap, it comes back to resistance with every trigger below, and you say, hell yeah, I'm going. That's chart reading, E. Webster. With this level of momentum and every trigger below a fib, nothing says that's going up. And you have one-to-ones inside a favorable. You take quick profits and quick profits. I'm a big fan of this trade. But you had to wait for what, 17, 18 minutes for it to set up, right? You took the long, you got in, and you said, oh, that one's over. And you just let it tell you when it was time to go. You just kind of said, hey, all I need is momentum. And when you got in, the large triggers were not a full bar away from the midband, which means that the midband is not behaving as a termination, which means that you had odds favorable, clear path, pull back to an area inside of favorable large triggers, money, money. Does that make sense to everybody? And this is a good lesson on the midband and the gap. When price reaches the midband and the large triggers remain full bar away, the midband is behaving as a termination. But when price reaches Fibonacci resistance in all these areas and every trigger line is below it, this is also a termination condition. So if you're going to take a shot, are you going to take a shot in the direction of the trend, in the direction of the momentum, or are you going to say gap theory to take me long? Do you see how one is easy and one just goes with the flow? One is just like, man, that's it. 900 a day, E. Webster? That's not a bad day, is it? Cut that in half, that's not a bad day. Now, the key is to do it every day, right? And that's where the repetition comes in, and that's where practice comes in, so that you can do it every day. There are 40 trades a day on the NASDAQ, so you can be choosy. I agree. I agree. Now we have two divergences on the 50-50 on the S&P. Crude oil came down, three divergences in the same price range, and look at the push. Isn't that awesome? Simple rules designed to keep you guys safe. All you have to do is learn the recognition, ask a bunch of questions, right? So guys, what would you like to talk about? We're about 30 seconds away from my brother telling me to shut up and let you guys ask questions, so I'm gonna beat him to the punch. What do you want to talk about? Where are my newer people? Where are my new folks in here? And Scott, I know you're a little bit into it. How you doing? How's it going? Everybody post pictures until like the second week. Guys, remember that this room is always your room. This room, whether you are on day 1 or day 100, is your room to get feedback. Don't feel like because you're not on demo, you can't post. Don't feel like because you're not in your first hour, your first month, you can't post. Trend trade short. Termination, full reversal, odds favorable, didn't hit the fib, pulls back to resistance inside of favorable large triggers. He waits for a little confirmation. And you lost your commitment to be short. Dag nabbit. That's okay. I think it's great that you admit that, John. I think it's awesome to show that sometimes you second guess yourself. Sometimes, no matter how freaking good at this you are, you're going to make a mistake. Mistakes are normal. One-to-ones on the NASDAQ make you squeamish. And now we're into the area, right? Is it going to hold or is it going to break? Does anybody know for sure? Three divergences add a fib. No, you don't, John. Three divergences at a fib with no triggers through. That's a pretty good indication, right? It's going to hold for the moment. You know not to go short. If you know it's going to hold, why didn't you go long right there? Because it's financial suicide. Because you don't have to be first. Because you can say to yourself, if this is really going to be a low, these triggers are going to roll. And if these triggers roll, well, I might end up with odds favorable momentum and a clear path. But the direction is still down. The triggers are still down. Everything is still down, and I'll be damned we're right back to that blue fib. Patience, right? It's fun to banter with your brother. I've known him pretty much my whole life. And now we're going to see, guys. And that's just that rule. Don't fight. There's no reason. Don't fight direction. Don't fight triggers. If this is really a bottom, everything's going to roll, guys. It'll go the other direction. It's what you do when there's nothing to do. Almost my whole life. As long as I can remember, he's been there. But isn't that pretty cool? You can say, heck yeah, no triggers through. I'm not going short. That's a good bottom. But having a plan keeps you from trying the long, keeps you from committing to your opinion. And now we're retesting it and the trigger's remaining above. And if it's going to be a bottom, it's just going to be a little easier for it to roll. So just have to be patient. All right, Tony, odds favorable, pulled back to support, and you said you're willing to take a shot. 50-50 trade. Hey, D-Rock, nice to see you, man. And since there wasn't a lot of room into trouble, you said, I'll just get paid. Nothing wrong with that. I like it, Tony. So you made 54, 56. You made about 200 on this one, right? Do you want to talk about where the other 400 is? Because that's the one that's probably going to fix, that's the one that's going to help you, right? Hey guys, I see this all the time, and Tony, I'm not trying to put you on the spot. Everybody loves to share a winner, and you killed this one. It's absolutely beautiful. But was there a mistake? Was there something that we can talk about to keep you from being down 200 bucks after a winner? Almost a tank of gas. And I did this a lot, guys. And my brother called me out on it as I would show the best trade. What I thought, I'm like, man, look at this winner. This is amazing. I'm so cool. You should want to be me because I'm rad. And look at that trade that I took. And my brother would just look at my chart and go, well, where's the loser? Right? And it turns out that my loser was into a termination condition, or my loser fought the trend, or it fought momentum. And that's really what took me next level. It really was. You're not obligated. Nobody's ever obligated. But I sure like to help. Oh, right on. Tried to buy. Today is not a buying day. Right on. But you know what you did wrong? Right on. And I think that's the key, right? If you don't need feedback, you don't have to show me every trade. Sometimes we know what we did. So that's okay. Odds favorable, clear path. And that was your entry, right? That was the beautiful one. And they pushed down a little more. So at the time of this signal, when this one didn't work, D-Rock, you still had odds favorable. You still had a clear path. You had odds favorable coming on your 8 range. And your reversal bar prints right at the area inside of favorable large triggers. Awesome. Have fun lifing, Ron. What do you think? Could you have taken that one? Does it fit your plan? Absolutely, I think you could. And I think that's a great example of how market flow can help a little bit. But the key is that the rules are still met, right? The rules are, you're still at support inside of favorable large triggers when that prints. And this just kind of says, yeah, D-Rock, check it out. You still have momentum. Everything's going up. Everything's going up. You still have momentum. Here's a good shot at it. And then D-Rock, do you see this? You have a pivot stop out at the outer bands with a reversal bar, with a signal, and things are starting to weaken. That is a huge indication not to take the next long for you guys with market flows. But yeah, I think you could have used it for confirmation. And I think it would have worked out great. There would have been plenty of room to make some money on that one. You're welcome. Have you just been on vacation? Must be nice. I've heard about you guys. Gatlinburg, for that long? I knew you were going. Ah, I hate it when my brother's right. No triggers through an area, no shorts. Is that right? Four divergences in the same price range. Isn't that cool? Strong in, retest. Weaker triggers. And now at least your small chart's turning green. Now your smalls are starting to break above. That's that patience piece. You were studying market flow last night? Let me know if I can help. Man. John tried to be first there. Great bottom, right? And then this goes back to kind of what we talked about. If it's really going to be a bottom, everything's going to agree. We're going to change colors. Things are going to roll. Smalls are going to get above. If it's really going to be a bottom, it's going to happen. You guys remember when we talked about decisions? Fibs are where decisions are made. Look at the fight. Out at the one-to-ones, out at the HVA, losing momentum, right? And guys, I gotta tell you, my brother is in the gifted talented program. He always has been. When you learn to read your charts, when you really become one with your charts, what you're gonna find is that you can manage trades faster. You can manage trades easier. You can manage trades to a point to where you can take what the average human would be a loser and turn it into small profits. And that's one of the things that my brother's very gifted at. Um, C-Dub, perfect. Just wait, right? 50-50, divergences everywhere. It might go up. I love that. Little visual checklist. C-Dub, great patience. Guys, I'm a huge fan of the pictures. When you guys don't have rules met and you choose not to trade, and then you bought here, is there a next pick? Support everything up. You waited for a reversal bar. Against all those divergences, and you got lucky on a little bit, and then that was the one, right? When everything agreed. No, he bought there, I think. Oh, you sold here. Thank you, John. So you sold right here. Is that right, C-Dub? You tried to go short with everything up? Oh, okay, thank you for that, John. And yeah, I can see why you got stopped out. Everything was going up. And then when everything agrees, it's easy, right? I think there's a great lesson there, and I think that we all have to fight a little bit to realize that it's no good to fight. Um, it rarely works out. So much so that somebody wrote a book about it, How to Commit Financial Suicide, One Easy Step. Trading against strong triggers, it just rarely works. It does just enough. And I had this talk with somebody once. Trading against strong triggers works just often enough to make you believe that you're invincible. And it's enough to blow out accounts and you'll lose them. You'll take one and it'll win, and then you'll lose 10, but you'll never forget the one that won, so you'll keep doing it. It's like the market lets you get away with it every now and then to create bad habits. And then trading in determination conditions. It's always better to trade from them instead of to them. It's like the one good golf shot. Man, I took the short right here and made all the money. I'm going to go buy new clubs, right? And then there's your good bottom. The triggers never broke, right? All the triggers are below support. Isn't that crazy? You guys got to witness that fight without any rules met. It's hard to do nothing, guys. It really is. It's hard to do nothing. But if you learn how to do nothing, life gets easier. And maybe you even catch that short. When you say, despite support, absolutely nothing changed. Everything kept pushing down over and over despite the bounces. That's Cav's short. He's already gone, I think, for the day, but I wouldn't be surprised to see Cav in right there at the fib. And he'll get paid somewhere down here. Oh, did you take it, Cav? That looks like yours. That looks a lot like the ones that you've been working on and absolutely nailing. Yep. One of the other cool things about this classroom, guys, is I'll get to know you so well that I'll know exactly what you're looking for. And it's fun because I'll go, oh, Ron was short here. He went long there. Cav did this. There's no doubt about it. John Novak did this. I can tell. But it takes a while to get that comfort level, doesn't it? But if you break it down, it's a clear path. And the momentum hasn't gotten there yet. But the momentum is crazy over here. And the path is clear. And what looks crazy difficult today becomes really easy in the future. All right, let's see what we have. 50-50 on the mid-band gap theory. Yeah, you just got to let it close the gap. So it's a bad top. These weren't quite a full bar away. It was close. It was really close. And with that mid-band there from a bad top. So D-Rock, here's today's lesson that I think is going to pay dividends for you. When you have a bad top, and this is for everybody, guys, when you're not coming from a termination that starts that reversal, when it is a bad top, when there's no fibs or one-to-one supporting it, the mid band is more likely to create a bounce. It really is. They're going to test the waters here. They see it too. And it loves to pull back to those large triggers. And I think your stop was appropriate. It just didn't work out. And then, yeah, that's just kind of bad luck. No, don't let it be. I mean, it is what it is, right? You can't win every trade. If you start letting losers frustrate you, go back and look at it. What did you see? You had odds favorable momentum. You had a clear path because the gap theory wasn't in play. You did take an area inside of favorable large triggers. Your stop was appropriate. D-Rock, I can't find anything that you did wrong with this. So remind yourself, when you stop expecting to win every trade, you're going to find that you actually win more trades. And when you stop caring about the results so much, focus on the execution of the method. And the execution was flawless. And then D-Rock, let me ask the magical question in front of God and everybody. Does your method, does your plan win more than it loses? Do you know without question it does? Then don't worry about the losses. They're normal. It's a part of the equity curve. Even the perfect trades result in absolute ass kicking sometimes. But because the execution is my focus, I want you guys to see this. Mark gives us this spreadsheet every day, but he shows losers in the spreadsheet. Guys, this is in the spreadsheet. I never want you to miss this trade because it follows the rules. It fits it 100%. You have to be willing to take losers every now and then. And there's a couple in there that didn't work. And it's funny, I remember one that there's Jose's perfect trade that didn't work. Absolutely beautiful, without question, nothing wrong with it. And it just didn't work. Guys, be okay with that. That's hard. It's hard to be okay with that, right? That old adage, you can't win them all. David, do you have Snagit or do you have Capture software? That's a big part of it. If you have Capture software, if you have the free one, you can't. Yeah, so you can't do it with Capture. Snagit is like it's like a $63 upgrade. But from here, it gives you your recents, and you can literally just drop that right into it. Snagit is Capture with more bells and whistles. That's all it is. And check it out, guys. Odds favorable right into support, and it holds like a champ, doesn't it? Same way it did here. Isn't that cool? Guys, I'm a big fan. If you're going to be with me, is that it? Hold on. Snagit. Yeah, that's it. That's the Snagit right there. That's a pretty good investment, I think. I'd never tell you where to spend your money. That's not for me. But I think it's $63. It's not a lot. Just don't supersize today at McDonald's and you'll be good. But it gives you all this stuff. And it's kind of cool too because you can come through and you can go download these things too. So like stamps and stuff like that. They've got different things that you can do, food and drink. So I can look at your chart and go, oh man, you're being corny. Bump, right? Or making bread. So it's just more fun. Pretty good investment. Hey, Tater Bear, how you doing, man? Well, that works out because I love to answer questions. So fire away. Support for the win, ladies and gentlemen. Is this going to be the one that turns it? I don't know. Don't stop laughing, Ace. It's good for you. Where's your other chart, Tater? Well, one of you is running something different. Cav, take care. Has Tony posted a trade in here? Tony, did you post in here? Is Tony in here? Tony, Texas. Okay, hold on. Sorry, there's about 5 Tonys. Let me find it. Give me just 1 second, Tater, and I got it. I can already tell you that you're missing your synthetic triggers. So ES 5-1, ES March 5-1. Notice how you have small and large, but you don't have synthetics. So you guys have a very different look. What does your large chart look like? Something's not right. So let me go back to, that was the S&P, right? Around 1018. Let's go back to the S&P at 1018. All right, so mine looks like Tony's. So Tater Bear, do me a favor. Are you in front of your computer right now? Right click, go to templates, because you don't even have synthetic triggers on yours, which is a big red flag. And make sure that it is 5-1 Rinko 2023. And I'm going to try something real quick. You refreshed your chart and it was the same as his? When you say you refreshed it, that looks like yours, doesn't it? Yeah, that does. So you had a 13.2 template on yours. There's mine with the 13.2 template. And then there is yours with the 13.2 template. And then when I go back and I put the correct template on there, some Scooby-Doo stuff going on here, right? Then we get back to where we need to be. So yeah, you had a 13.2 template on your 5-1 chart, Tater Bear. And it kind of messed up the look there. And then once you get that 5-1 template back on, you're good. That is the mechanics idea of known good parts. But because I could look at yours, and this is one of the things, guys, and remember that small charts have large and synthetic, right? And Tater Bear, this isn't only for you, this is for everybody. So if you don't see synthetics, if all you see is large and small, something has gone awry. And it's okay to say, hey, wait a minute, that's not the right look for this chart. Let me try and reapply the template and see what we come up with. And check it out, guys, 50-50 with 2 divergences. I'll be darned, it pushed it lower. Doesn't mean the move is over, but the area didn't break yet, did it? Not yet. Pretty cool. And Tater Bear, just for grins, what's got you going short? So what about the large chart told you to go short? Just curious. Is that your new one? And what's going on with your large chart? No, there's nothing right about this one. I'm not sure what, I think you reversed your templates. So right click on the large chart and load in the 13.2 Renko. And if I'm not mistaken, let me see if this looks. Your short makes a lot more sense now, having seen both charts. Let's see what happens if I put the 5-1 on my large chart. Because, yeah, so your 5-1 was on the large chart, I think, and your large chart was on your 5-1. But that short makes a lot more sense now, doesn't it? I mean, it makes a lot more sense. Everything says down, and it's pulling right back. And I'm not sure what template you had on there. Well, that's good. That makes me happier to see that. Um, but based off of the correct look, do you see how shorts may not have been your best shot? Yeah. The indicators are great, but you got to read them. So you don't have odds favorable momentum. Would you agree to that? Yeah, you have to have the right charts. That helps. But with the smalls up and inside, that's not your best look for shorts. And then with everything up, that's not your best look for shorts. Wouldn't you agree? Nothing about this chart says go down. Even if we only focused on this chart, the direction is up. Whoop, that's bread. Well, if you got in much earlier, the direction has been up for quite a while. That's the first place it said down. The large triggers are up, the synthetic triggers are up, the smalls are outside of the large. I mean, even your small chart says, whoo, don't do it. The last place it said down before that would have been around 1025 when everything else was going down. It was red. I agree. So you got in after a second lower divergence with the smalls below the large right at the area. That's a big stop. I could get on board with what you were looking at. You were short from here? Yeah, everything is greening up, right? I think this is just one of those things where, no, you're okay. I think this is one of those things where you just didn't have the right information because of the wrong templates, because of the confusion. You're thinking down, you're looking for opportunities. Um, well, that's okay. Then just write it off. Hopefully, you're on simulator as you're learning this. Just remember, when they all agree, it gets easy. Even when they're wrong, if they all agree, it gets easy. So no reason to go short at these one-to-ones, especially with everything saying up. And I'm looking, that's not your chart. Where's your chart? There we go. Absolutely nothing says short. That red fib is what got you in, right? You said, oh, look, a red fib, I'm going short. But if you just let it roll, it works out better. That's okay. That's just kind of tough, man. That's tough when that happens. But now you can dust off and you can say, all right, now my charts look right. Now I'm going the right way. But man, no, don't let it. You're on NinjaTrader 8? Mike, thanks for being here, man. I appreciate you. Are you relatively computer savvy, Tater Bear? I love saying your name. Cool. All right, so let's start fresh. I want you to come into tomorrow with confidence, okay? Or going into this afternoon with confidence. If you're going to trade this afternoon, it is an FOMC day. Let's clean house. Get rid of everything. Go through, delete your workspaces, your templates, your files. Clean house. Super easy to do. And then go to the resources page. And guys, I do this once a week anyway. From the resources page, just re-download the indicators. And what it's going to do is it's going to give you the proper workspaces. It's going to give you the proper templates. It's going to give you everything like you started brand new on day one. And we want you to be impressed with your new shiny penny. Um, and guys, this is good to know how to do anyway. But Tater Bear, hopefully this will alleviate some of the stress. And you're going to go into tomorrow with the peace of mind knowing that everything is exactly as it should be. Um, But if your charts ever seem off, like you come in and you're like, man, Mark's got fibs that I don't, or Mark doesn't have fibs that I do have, or my colors look totally different, man, raise your hand instantly. Like get in the classroom instantly, raise your hand. Let me know if there's anything that I can do to help. And of course, we've got Jason in tech as well. So don't be afraid to knock on his door. The only things that Jason is incapable of fixing are the things that are not broken. Um, oh, yeah. Stupid life always getting in the way, right? I feel you, man. Do the clean out. I think you'll be happy with the results. We'll come in tomorrow and we'll absolutely tear it up and we'll have a good time. And I think you'll find life is a lot easier. And guys, thank you everybody for being here. Thank you for the participation. Thank you for the great questions, for the pictures you guys post. I want you to keep doing it. I want you to keep coming in and posting and asking for help, guys. Don't be afraid to ask for help. Show me your losers. And we will work together. You'll get where you want to be. There's no doubt in my mind about it. Keep it simple. And I will be back tomorrow, 9 a.m. We're going to do it again and again and again. You guys take care. Every